countries are, we're seeing tremendous AI companies leveraging the strengths of each country. In the case of U.S. enterprise software, in the case of China manufacturing.
Kai-Fu Lee, thank you so much for joining us on Leaders with LACWA. So how did you choose AI as your field of expertise?
It was actually my freshman year in college.
On variant, with the German partner of Pfizer saying it could have a new version ready within 100 days if necessary. ADRs of BioNTech, they're up by 4%. AstraZeneca ADRs down 1.4%. Pfizer down now by 1%. J&J, it is up 0.5%. That's a Bloomberg Business Flash.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Well, very good afternoon, everyone. It is Monday, November 29th. We are getting ready to wrap up the month of November. Almost there. Live from the Bloomberg Interactive Broker Studio. We are streaming on YouTube. I was trying to get to Tim is back.
I'm back.
Did you have a good holiday?
I did. I had a little FOMO on Friday, I got to tell you, with that shortened trading day and the decline that we saw. I was like, I want to be on Twitter and be there. But hey, look what's happening today, Carol.
You're back for the rally.
I'm back for the rally. And look, stocks are higher for the month to date so far.
I know, right? Quite a bounce back. All right, we're going to talk about that. We're going to talk about investors, kind of their concerns easing about the latest COVID variant. We'll get to that. Also, investors not quite sure what to make of the news that Jack Dorsey's out at Twitter because the stock rallied big time and then it kind of just dropped back and is not doing too much of anything.
Yeah, down 1.42% right now.
Yeah, all over the place. We'll talk about that. We're going to talk about a couple of things from the legal side of our world. The most important abortion case in a generation that'll be argued Wednesday before the Supreme Court. And then this story, it's on your radar, Tim.
Yeah, the courtroom scene playing out. Ghislaine Maxwell's sex trafficking trial is kicking off with jury selection. We have a live blog going right now, and they were delayed this morning because a couple jurors forgot about it. Potential jurors, they forgot to go.
I guess it happens to the best of us. All right, let's get to it, and let's get to the Market Drivers Report. Let's set your Business Week agenda on this Monday. Dave Wilson, stocks editor at Bloomberg News. He's in our Interactive Brokers studio. So too is Kriti Gupta, Bloomberg Markets correspondent. So Dave, let's kick it off with you. We didn't start off so strong, but we definitely are a lot stronger than we were. In fact, we're pretty much hovering near our best levels of the session, a rally.
Indeed. Picked up kind of after some early weakness. And I got to tell you, I mean, it looks pretty familiar because you go down the lineup of, shall we say, big tech. I was thinking today we should probably call them the Magnificent Seven now. Microsoft, like Apple, Google's owner Alphabet, Amazon, Tesla, Facebook's owner Meta Platforms, and NVIDIA. Yes, the Magnificent Seven. All up at least 2% and change in today's trading. And really at the forefront of the gains, technology and that consumer discretionary category where you find Amazon and Tesla, and communications not doing half bad either. That's Facebook, Meta Platforms, that's Google, Alphabet, but it's also Twitter, so,
Is it a reaction to Friday being overdone in the other direction, and we're like, okay, wait a minute, maybe this variant isn't so bad? Is it as simple as that?
It has the look of that. I mean, you have to remember that, Friday, a lot of people taking long weekends, not around, so...
Or long weeks, Tim Stenovic.
That's me.
That's true. I mean,
or Kriti Gupta.
Felt good.
I took a 4-day. Come on. Tim took a whole
because she
week.
could.
Because Dave could let me, yeah.
Yeah, it's what I do. In any case, I mean, it's as reasonable a conclusion as anything at this point in terms of the recovery. But, I just got to focus on those big seven stocks because it is a really familiar scenario in terms of how share prices have been moving over time here with those kinds of companies.
Did Dave invent a new catchphrase?
I'm like going with it. You better I don't know.
Forget fame. We're going with Magnificent Seven. Hey, Kriti Gupta, come on in here. What are you keeping an eye on today?
Yeah, well, I mean, I think Dave really hit it here. This is kind of deja vu. And if you actually looked at back in July, you saw when the Delta variant was first introduced, you saw this exact thing. You saw this massive dip. And big shout out to Vanda Securities for looking at the retail bid in that because they said $2 billion was bought on that day. And similarly, on Friday, you had this big drop on light volume, like Dave said. And once again, the retail bidder comes in and buys about $2 billion worth of stocks worth of ETFs. And then the next day, you see this defensive trade right here with the S&P 500 in the green, tech outperformance, just like we did the last time a different variant came around. So totally normal to see this. But remember, the crash essentially of whether it's in the flash crash in oil or whether it's the pullback in on Friday, this is coming with a background of those financial conditions kind of tightening. There was already something happening. Inflation was higher. People were pulling out of assets. Consumer sentiment was lower. And remember, 2021 is a year in which we don't really see 10% corrections on bad news. We see 2-3% pullbacks, and then people hop in and buy, and that's exactly what you saw this time.
Retail to the rescue.
Right, exactly. And every pullback is seen as a buying opportunity. We
much.
certainly see that churn. All right, guys, there's lots, though, going on this week, including that monthly jobs report. We're going to hear from Jay Powell. Dave, what's on your kind of radar as we kick off?
Well, I mean, it really is a matter of, at this point, what's going to get people to kind of shift in any sense in terms of the trend here. I mean, you talk about how we've had the buy the dip going on today. I mean, you've had like one decline of more than 5% for the S&P 500 all year. 5%. I mean, we're not talking 10 or 20 or any of that. That was last year, I guess. So, you know, it really is a matter. Does the market kind of keep going under its own momentum at this point? Is there anything that kind of interrupts it, you know, for more than a day like we saw on Friday? I mean, that's the sort of stuff that's worth paying attention to.
We know what interrupts it.
Payrolls, man.
Well, no, I was going to say COVID, though. Like,
well, there you go.
Whether it's CEOs, whether it's Jay Powell, every caveat, right, is always like, depends what happens with the pandemic.
It does, and I think we should point out the S&P 500 hit session highs at the time when President Biden was speaking. He did say that the U.S. will not resort to lockdowns again, and I think, look, investors welcome that news.
Yeah.
Certainly a different situation than what we're seeing in Europe at this point.
Yeah. Creedy's like, folks, payrolls, can we just get that?
I like to look at the data, but you're right. I mean, this is a scenario that we have been through before. Even hypothetically, worst case scenario, we do go into lockdowns. We know how to deal with it, right? We know what kind of things are going to fly off the shelves. We know how to work from home. We have the infrastructure built to do that. So you're probably not going to see as dramatic of a 2020 thing. I don't even think we're allowed to.
Really, really, really quickly, what do we need to know about jobs report? Just quickly.
Whether it changes the Fed's mantra, whether these rate hike bets actually stay as rate hike bets or whether they get pared back. It's a game changer.
Good stuff. It's going to be a busy, busy week. All right, Kriti Gupta, thank you so much, Bloomberg Markets correspondent. Dave Wilson, he's going to be back with his chart and stock of the day.
Let's do the Bloomberg Business Week bite of the day. It's one number that tells us a lot. It's brought to you by GEP. GEP helps businesses transform supply chains with strategy, managed services, and AI-based cloud-native software. Learn more at GEP.com.
Today's number is 20. That's the number of pieces of pecan pie that I have had over the weekend. Seriously.
Oh, for me, it was pumpkin. But yeah, I feel you. And 20 scoops of ice cream to go along with it.
Oh, my God. Getting on my Peloton.
Well, this is about food, Carol. It's about DoorDash.
Yeah, releasing the 20 most ordered items on the platform for Thanksgiving. Taking the top spot was peach mango pie, followed by dinner rolls, sirloin steak, potato wedges, and rounding out the top 5 was roasted turkey, of course. Other notables, chocolate truffles and horchata.
Horchata, the best.
Is it? What is that?
It's a rice drink.
Oh.
Delicious, Mexican.
Fish and chips also big on Thanksgiving.
All right, I got to order some more horchata from DoorDash. Let's get to check the latest world and national news. Nancy Lyons is standing by in D.C. Hey there, Nance.
Hey, Tim. President Biden says his administration is moving quickly to curb the new Omicron variant of coronavirus. He says the best defense is to be fully vaccinated. That means also receiving a booster. And he says they're already looking at other options if they're needed.
My team is already working with officials at Pfizer and Moderna and Johnson & Johnson to develop contingency plans for vaccines or boosters if needed.
Biden says there's no reason to panic, but he is urging everyone to become fully vaccinated. The Omicron strain has already been reported in a number of other nations, including Germany, Italy, and the UK. Pfizer's CEO says his company could have a vaccine ready in under 100 days to target the newest coronavirus variant. The new strain has more than 30 mutations in its spikes, which is the part of the virus that infects people. Congress is back from recess today, and lawmakers face a packed schedule to meet several December deadlines.
First, lawmakers have to pass a stopgap measure to avoid a shutdown this Friday. The Senate also has to take up President Biden's Build Back Better social spending bill. Senate Republicans are already planning to force votes on long-shot amendments. Lawmakers will also need to raise or suspend the debt ceiling by mid-December. That deadline was originally this Friday, but the Treasury Department projects the country has until December 15th to avoid a default on the government's debt. In Washington, I'm Amy Morris, Bloomberg Radio.
Golf pioneer Lee Elder has died at the age of 87. He broke down racial barriers as the first black golfer to play in the Masters. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Carol Massler, along with Tim Stenovic in our Interactive Brokers studio. You know, when I take some time off, I do try to like unwind, back off.
Did you get any time off? I guess you got Friday off, right? Thursday,
I did.
Friday?
It was a nice long weekend. It was really
good.
It was great. But it was like all of a sudden then you check in on the markets, you're like, oh my God, and then it's the variant, trying to get an understanding of what was going on.
Yeah, well, we have a good roundup of what exactly is going on with the Omicron variant.
Nicely said, by the way.
Thank you. I've been practicing.
We've been all struggling with this.
A lot of people think there's an N in there.
I know.
Yeah.
Okay.
An N in the beginning. There's
Omicron.
not. Yeah.
It's like Captain Omicron.
You know what? It's all Greek to me, Carol.
But I'm bummed.
All right. Well, people infected by this variant in South Africa, they are showing very different symptoms to those suffering from the Delta strain. This, according to the doctor who alerted government scientists to the possibility of a new variant. So a little bit of good news there.
Yeah, exactly. So patients who got it, they complained of fatigue, head and body aches, and occasional sore throats and coughs. By comparison, if you think about the Delta infections, they caused elevated pulse rates, and that resulted in low oxygen levels and a loss of smell and taste. So it does feel like what happens is of lesser concern and potentially lesser impact on your health.
That's part of the data that we're trying to make sense of, right?
I feel like we're still figuring it out.
We are, and then another article comes out a little later that gets you thinking about something that's a little concerning. According to the National Institute for Communicable Diseases in South Africa, children under the age of 2 account for about 10% of total hospital admissions in the Omicron epicenter there in South Africa. So the context here is important. More kids are being admitted than during the early stages of the country entering the current 4th wave of infections, although a similar trend occurred during the 3rd wave when Delta was dominant. So,
which makes sense, right? Because these are kids who weren't possibly vaccinated, right? And so they're getting it. Meantime, the New York City health chief advising indoor mask wearing ahead of Omicron. So we are seeing people, take some more conservative steps. But we know how to do this. We've got some tools in our toolkit, and so we understand how it works.
Please wear the masks on the subway.
I know.
Okay? Or then I don't have to move away from you.
And that's from Tim, who's a really nice guy.
Please.
All right, you're listening to Bloomberg Business Week, and this is Bloomberg Radio.
In case you missed it, you can still catch our special podcast from the Stanford Graduate School of Business. Interviews include TPG's Jim Coulter, former AB InBev CEO Carlos Brito, and more. Download it now at Bloomberg.com or wherever you get your podcasts. It's 2:15 on Wall Street. Time for Drive Time Traffic. We do it every 15 minutes right here on Bloomberg Radio.
Okay, traders, hello again. I'm going to place an order to buy euro right now. The price I'm looking to buy 112.67. 112.67. Here is the price, and all of you guys who looking to trade euro right now. Please place your order and let's wait. Let's see what's going to happen. If we'll be able to fill this order. Okay, guys? I'll speak to you later. Stay safe.
Side of the Holland Tunnel right now at this very early part of the ride home. Only 5 minutes in. No reported delays at the Lincoln Tunnel or over at the George Washington Bridge. Looks like the ride in New Jersey and Wantage. You've got the roadblock both ways on 22 at Greenville Road with a flipped over tractor trailer. The Bloomberg 11:30 3-day weather. Rest of today, partly sunny, high 40 to 45. Tonight, increasing clouds, low of 30. Tuesday, mostly cloudy, high 40 to 45. Wednesday, partly sunny, high 45 to 50. Right now, partly cloudy in New York. We're at 41 degrees with the best ride. In and out of the city, I'm Ed Kalegi, Bloomberg 11:30. Bloomberg Business Week continues.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks are rallying. We're holding close to session highs. Bonds are falling as a relative sense of calm returns to global markets as investors reassess their worst-case scenarios for the Omicron coronavirus strain. All major groups in the S&P 500 are advancing, with the S&P up now by 72 points, a gain of 1.6%. The Dow is up 326, up 0.9%, while NASDAQ is rallying 313 now, up by 2%. 10-year down 16.30 seconds. 10-year yield 1.52%. Spot gold down 1.1%, down $19 the ounce to $17.83. And West Texas Intermediate crude is up 3.5%, $70.52 right now for a barrel of WTI. Jack Dorsey, the co-founder and CEO of Twitter, is stepping down, turning over the position to the company's chief technology officer, Parag Agrawal. Shares of Twitter, they're down now by 1.5%. Recapping, stocks are advancing. S&P up 72, up 1.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, appreciate the update. So back among our most read stories is what's going on with COVID again and this new variant.
Yeah, we gave you a few headlines. The doctor who alerted the government scientists to the possibility of a new variant said people infected with Omicron are showing milder symptoms than those suffering the Delta strain. Government across the globe, they're stepping up restrictions on travel as the World Health Organization warned that this new variant of the virus, Carol, could fuel a fresh surge in infections.
Right. So we saw so much concern on Friday, saw the market sell off. You see the bounce back today. So investors seem to be calming down as we seem to be feeling like maybe this is manageable, this latest variant. But again, as we mentioned earlier, still a lot to be known.
Well, let's get into it with Dr. Rhonda Meadows, president of Population Health, Providence Health System, joining us on the phone from Renton, Washington. We should remind everyone that if we think back to about 2 years ago, the first case of COVID-19, it was confirmed in Washington State at Providence Regional Medical Center. That was in Everett, Washington, back in January of 2020. Dr. Meadows, it's great to have you on the program. Thanks for joining us.
Well, thank you for inviting me back.
So it's so interesting because if we were doing this on Friday, I think the market would be telling us that it's very concerned about this new variant. But the market telling us today that it's not concerned about the new variant. That's what investors are showing us. As a doctor, what are you thinking?
I am going to have to agree with them. I like what you were saying earlier on your show. We actually have seen this movie before. We actually have some best practices and things that we can do. So panic is not the strategy, right? Being informed is how you make your plan. I would agree with them. I think once we realize what we were seeing and what we don't know yet, then people said, okay, wait a minute, let's just cool our jets for a second and see this thing through.
It is a reminder, right, though, Dr. Meadows, though, that we are constantly kind of racing against time, and if we don't get any kind of full immunity in terms of our society on a global level, we are ultimately going to be at risk of a variant coming out that's going to be more problematic.
I think you are correct. And so this is what viruses do. This is what they live to do. They mutate to try to find some way to propagate themselves. As long as there are pockets of people who are unvaccinated, and we can now see it's not just in your local neighborhood, it's globally. So you are right. As long as there are people locally, regionally, nationally, and globally who are unvaccinated, that is a prime place for more mutations to occur. And at some point, those mutations may actually result in more severe disease. Right now, we don't know that that's the case. We just simply know this is a variant with lots of mutation that is spreading faster than the usual.
Excuse me for cutting you off. We only have about 3 minutes left, and we have so much to get to. Is there a chance, Dr. Meadows, that we perhaps could see this variant overtake all the other variants and it be a less mild form of the infection? So essentially the winning variant in terms of nature is one that isn't as dangerous to the population?
Yes. And the reason I say that is that a more virulent or a more severe variant basically would kill off its host.
Right? Die out, right? And ultimately die out.
Yeah. Right. So what we want to do is actually, if we're going to have something that's going to be dominant, let it be the milder version and let it be a milder version that we can use the vaccine against.
Yeah. Does that actually help in creating a much broader immunity across the globe, potentially?
Does what? Having more mutations?
No. Having this latest variant that is not as severe, but perhaps maybe, spreads more easily.
I don't know if that's a way to kind of think about it. I think it's probably more important that the vaccines themselves actually be modified in any way that they need to be to make sure that we're getting the best immunity, and then the vaccines actually get into the arms of people who are unvaccinated or who are under-vaccinated. That's probably more the way we should think about it, rather than counting or trying to figure out what a virus is going to do.
How should we think about getting...
No, I get it. I totally get it. I look at society where getting a vaccine has become so political and people pushing back. So I'm thinking, okay, in the face of maybe people not stepping up and getting the vaccine, how do we get to a better place? And I think, all right, is it just that we get a less severe case of COVID that goes around, a variant that just infects more people and that they just develop immunity that way?
I think that there are too many mutations, variations that are going to occur with this virus anyway. We can't count on that. We have to take care of the thing that we can control, which is those vaccines. And you know as well as I do that the virus does not care about our politics.
That is so true. Yeah.
Well, Carol brings up a really good point because I tweeted about getting a booster last week, and I got some pushback on Twitter from somebody who listens to this show a lot. And he asked if I got tested for antibodies before I did the booster. No, I didn't. I got the booster because the CDC recommended it. And he made the point that if we get boosters in this country when not the entire world is vaccinated, we're pulling vaccine away from people who haven't gotten it yet. And that's a criticism that I've heard leveled a lot in developed countries. What do you make of that, Dr. Meadows?
So I'm going to tell you that I don't know that it's an either or. I think we can still actually get vaccine and give it to people in other countries that don't have it now. I think we can do that. And I think we can also provide boosters for people, particularly the people 50 and up or people 18 and up who have underlying conditions that would make them more at risk. I don't think this is an either or decision. I think what there has to be is the will to actually get vaccine doses to poorer nations, right? I think that's the question. Not whether or not we can produce it, but will we give it to them so they can go ahead and use it?
Right. We're getting some pushback already from some nations who are saying, stop sending them. We have so many at this point. Dr. Meadows, just very quickly, 20 seconds. Are you guys expecting some kind of surge in your system through the colder months? Just quickly.
We are preparing as if it's coming, no matter what. Whether it's Delta, whether it's Omicron, or whether it's something new. We are prepared to address any surge.
Okay. Well, we wish you well and a safe and healthy holiday season. Be well. Dr. Rhonda Meadows, President of Population Health over at Providence Health System, on the phone from Washington. This is Bloomberg.
Bloomberg Radio continues its market coverage well past the close of U.S. trading with Bloomberg Daybreak Asia tonight at 6 p.m. Wall Street time. Join Brian Curtis and Doug Krisner live from Hong Kong and New York tonight at 6 on Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
We're going to talk about Twitter.
It's up, it's down, new CEO. What's going on?
I don't know. We're going to find out in just a moment. In the meantime, let's get back to your top business stories and the one and only Charlie Pellet.
Hey, thank you very much. Here's what's going on. Twitter shares tumbling now by 1.7%. Stocks higher across the board. Close to session highs on this Monday. What a contrast from Friday. Friday, you recall, the S&P was down 2.2%. Right now, the S&P is up 1.5%, up by 69 points. The Dow up 304, up 0.8. We've got NASDAQ up 298, up 1.9%. 10-year yield, 1.52%. Stocks climb, bonds fell as a relative sense of calm returns to global markets. Governments across the globe are stepping up restrictions on travel as the World Health Organization warns that the new variant of the virus could fuel a fresh surge in infections with severe consequences. Dr. Joshua Sharfstein is Vice Dean at the Johns Hopkins Bloomberg School of Public Health.
We have to go through the process of studying this variant while we continue to be vigilant and take precautions that we need to take to prevent the spread of infections. This may well not be as dangerous as other variants, but it may be have the capacity to infect people a little more who are vaccinated. We're just going to have to find out.
Dr. Sharfstein with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine names, Pfizer down 1%, German partner BioNTech up 3%, AstraZeneca's ADRs down 1.5%, Moderna surging 11.3%, J&J up 0.7. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, really appreciate the update. So among our most read on the terminal has to do with Twitter. This headline crossed and we're all like, all right, we got to find out what's going on. In fact, Twitter shares, they were up 11% early on in the trade on this news. Jack Dorsey, no longer CEO. Tim, they're down about 2% though.
Let's bring in Mandeep Singh, Senior Tech Industry Analyst for Bloomberg Intelligence. He joins us on the phone from New York City. Mandeep, help us understand what's going on here. Jack Dorsey had been at the helm since June 1st of 2015, at least in this iteration as CEO. First, he was interim CEO, right, and then he became full-time CEO again. And since then, the stock has just underperformed its peers and the benchmarks in a massive way. Help us make sense of Twitter's moves today, though, with this announcement.
Yes. So, again, I think Twitter has been a story of continued underperformance when it comes to execution on the ad side. And part of that has to do with, them not being able to add more advertisers, to develop a robust ad platform. And I think what happened today was initially investors thought that they would bring in somebody from outside. The CEO search was more comprehensive in the sense, they went about it objectively and they found the best candidate. Well, after 2 hours, we learned they picked up the CTO to be the next CEO, which I think, the way investors are looking at it is it will more or less be a continuation of the existing strategy. Granted, this guy has, credentials in terms of being a product guy. He can definitely improve on that ad platform that I mentioned before. But at the end of the day, when you look at these companies' targets, which they gave at the beginning of the year, 20% user growth, it will be hard because they're not bringing in somebody new. And, I think investors are interpreting it as that those targets won't be met, the 2023 targets. And that's why you're seeing this kind of a stock reaction.
But what does it mean when they bring in Mandeep? Does it say something about changes to come on a tech level? I was trying to think, is there another tech company out there that brought in their CTO and it was a game changer, maybe in a good way, or it was disastrous?
You can think about Microsoft, bringing in Satya,
right,
who was leading the cloud division to be the CEO of the company. He was an internal candidate, and guess what? He did a phenomenal job in terms of the vision and execution that the company showed after he took over. So I think there is merit to bringing a product guy and, a tech-focused guy to fix all the product issues that Twitter has faced over the years. But in terms of the near-term kind of targets and execution, again, it doesn't give you the impression that, there will be a drastic change in the company because of this announcement. And I think investors aren't even sure they went about the CEO search in the most comprehensive way. I mean, we don't know anything about how long were they looking for a CEO and how many candidates that they have shortlisted. So I think the objectivity of this search isn't very obvious to investors at this point of time.
So help us make sense of this for our audience here, because as I mentioned, shares of Twitter massively underperforming peer Facebook, for example, since the time that Dorsey came on as CEO, underperforming the NASDAQ 100, the S&P 500. The list continues to go on. Is a continuation of what has been happening, a continuation of its strategy, is that a good thing for investors?
Well, so look, when you look at the social media space, that has evolved quite a bit in the last, 5 years. We were mostly focused on text-based content. Then, videos, short-form videos really became a craze. You saw the rise of TikTok. Well, Twitter didn't really participate in any of those trends. When you look at a company like Snap, which is growing 50%, which continues to think they can grow 50%, even with their core audience being, the younger demographic, they're doing something right in terms of monetization using ads. In stark contrast, Twitter is growing, 18-20%, and that is in line with the digital ad market growth. So it makes you wonder, Twitter with its kind of engagement, and really it's one of the, the most under monetized platform on the internet. It's got a very high level of engagement. It's got a core user base that uses it, but they're still not able to monetize it. So the core problem does lie in execution and, how they show the targeted, whether the ads are actually targeted or not. And that is why you see those kind of numbers, trailing the likes of Snap.
Mandeep, just real quickly, 25 seconds. Can they monetize Twitter in a more effective way? Is it just bad management, or is it just like we've been having this conversation about Twitter for a long time? Can they really effectively monetize it in a better way? Just quickly.
They can, and they have to think about the next version of social media, and it has to factor in metaverse. That's why Facebook and Snap, everyone is going after metaverse. So they have to think long term here and not just fixing the holes.
Like I said, I've seen this movie before.
Yeah, I mean,
we'll see what happens.
Twitter's product just hasn't evolved the way that other platforms have. And like Mandeep said, social media has changed so much in the last 5 years.
And yet it's such a part of certainly our world, the media world, but I think a lot of people use it fairly effectively to communicate. All right, Mandeep Singh of Bloomberg Intelligence, thank you so much. Let's get back to World and National News and Nancy Lyons.
Thanks, Carol. President Biden says the new Omicron variant of the coronavirus is of concern, but not a cause for panic.
Sooner or later, we're going to see cases of this new variant here in the United States. We'll have to face this new threat just as we faced those that come before it.
Biden is urging everyone to become fully vaccinated. On Friday, he imposed a travel ban from several South African nations where the new variant is prevalent. But Baylor's Dr. Peter Hotez, dean of the National School of Tropical Medicine, tells Bloomberg travel bans simply don't work.
By the time we identify a variant, it's already gone global, and so I think a lot of this is based on optics, where, especially in the European Union and now the U.S., they want to show that they're doing something, and unfortunately, it's incredibly self-defeating.
Hotez says raising the vaccination rate is the best way to tackle the new variant. Congress is back in Washington and has a busy month ahead, according to Bloomberg government's Emily Wilkins.
They've got that shutdown deadline on December 3rd, then moving a couple weeks to December 15th. They have the debt limit. That's going to need to be raised. We're still seeing a standoff between Republicans and Democrats over that. You also have that social welfare and tax plan known as the Build Back Better from President Biden.
Bloomberg government's Emily Wilkins says the House has approved that proposal, but its fate in the Senate still unknown. Opening statements are underway in the sex trafficking trial of Ghislaine Maxwell. Prosecutors say the 59-year-old was a predator who recruited and groomed underage girls for the late financier Jeffrey Epstein to sexually abuse. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. It's going to be a pretty busy week. There's a lot going on. We've got our monthly jobs report come Friday. We're going to hear from Jay Powell, also the Treasury Secretary, Janet Yellen. They'll be up on Capitol Hill. There are also a very important case that goes before the Supreme Court this week.
Yeah, and one of the most read on the Bloomberg terminal includes a story by our own Greg Storr about where the Supreme Court justices stand when it comes to abortion rights. And it lists each justice. Remember, the makeup of the Supreme Court was dramatically changed under President Trump,
right,
which he had an opportunity to actually nominate 3 different justices to the Supreme Court and move it toward a conservative majority.
Right, and we know, listen, this is something that when they are appointed, we know the Supreme Court justices are often on the court for a very, very long time, and that's why, certainly getting political a little bit, the different parties want some say in appointing someone, right? Because whether it's conservative or more liberal, this is an individual who ends up ultimately staying on the court for a long time. Doesn't mean that they vote down party lines, not at all. But nonetheless, it could certainly sway on some big decisions.
Well, you did say it was a big week for the Supreme Court. That's because the court is going to hear arguments on Wednesday, Carol, in a Mississippi appeal that asks the court to overturn Roe v. Wade. That, of course, is the 1973 decision that legalized abortion nationwide. Mississippi is defending its ban on abortion after 15 weeks of pregnancy, a far more stringent restriction than any of the Supreme Court has previously upheld.
And this story is breaks it down by each of the Supreme Court justices. Clarence Thomas, of course, making no secret of his longstanding desire to overturn Roe versus Wade. It goes through all of them. Sam Alito has been a consistent vote against abortion rights. Gorsuch hasn't directly advocated overturning Roe. Anyway, it's a breakdown of each of them in terms of how they stand. That's not to say that once they hear the arguments, that they may think differently.
Right, and John Roberts, for example, the Chief Justice, he stands alone as actually having voted on both sides of abortion cases. He was a dissent when it came to the Texas abortion restriction in 2016, then he strode to strike down 4 years later a near identical Louisiana rule.
But it just gives you some foundation as we go into this. And we're going to talk in just a moment about a veteran litigator that's going to be arguing the case before those Supreme Court justices. We'll get to that in just a moment.
Okay, guys, I have to cancel the order to buy euro because, as you can see, it moved away, and this gap probably it will be filled after working hours, probably after 10 o'clock. But in the meantime, please cancel your order. And let's see what's going to happen next with euro. Probably we'll get into trade a little bit later. Okay, guys, so please cancel your order.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Sense of calm returning to global markets today. Investors reassessing their worst-case scenarios for the virus strain. Right now, we have got the Dow up 290, up 0.8%. NASDAQ up 310, a gain there of 2%. And again, the S&P up by 1.5%. 10 years down 15.30 seconds. 10-year yield 1.52%. Gold down 1.1%. 17.82 the ounce. West Texas Intermediate crude up 1.8% right now. 69.35 a barrel. I'm Charlie Pelleton. That is our Bloomberg Business Flash.
All right, Charlie, thank you so much. Tim and I were just talking about this. The most important abortion case in a generation will be argued Wednesday before the nation's top court. 9 justices will decide that outcome. And Tim, the veteran litigator that will be arguing the case is betting on a precedent to save abortion rights.
It's Julie Rickleman, and David Yaffe-Bellany writes all about her in the most recent issue of Bloomberg Businessweek magazine. You can read it on the Bloomberg and at Bloomberg.com. Joining us now is David Yaffe-Bellany and Joel Weber, editor of Bloomberg Businessweek. The precedent when it comes to Roe v. Wade. Am I going to get this right, Joel? Stare decisis? Diasis?
Boy, I mean,
it's
maybe let David take that one.
Yeah.
But, you know, the thing that we often try and do at the magazine with stories like this is, like, we know that there's this news event coming that is basically could be one for the ages, you know, have generational consequences in terms of what this outcome looks like. And if we do our jobs well, there's often a character sort of at the center of that storm, and that's what just immediately caught my attention when David started talking to us about the attorney who's actually going to be defending in front of the court. So David, tell us more about Julie Rickleman.
Sure. So she's one of the kind of preeminent abortion law litigators in the United States. The last time there was a major abortion case at the U.S. Supreme Court, which was about 1.5 years ago, she was arguing on the side of the abortion clinics. So she's very seasoned and has been doing these sorts of cases for decades and decades. But this is as important as it gets. And one of the reasons I was interested in her was to kind of understand how it feels like to be somebody with the kind of weight of the world on your shoulders going into this sort of argument.
And how's she doing with the weight of the world on her shoulders?
I think she's holding up fine. I mean, like I was saying, she's very experienced and she's argued at the Supreme Court before, so I think that helps. But she says it's definitely stressful, and she's working long days to get ready, doing kind of trial arguments in front of experienced litigators at law firms in D.C. and other places. So she's working really hard to make sure that she's ready for arguments on December 1st.
Well, what do we know about her approach for arguments come this week, and in the context of how she argued the Louisiana case? What does her strategy center on?
Sure. So I mean, at the heart of this case is a decades-old precedent in Roe v. Wade. It's very rare, though not unheard of, for the Supreme Court to overturn its own precedent. And one of the things that she's going to be stressing is the principle of stare decisis and the importance of kind of maintaining settled law and not creating chaos unnecessarily by sort of changing tracks kind of on a whim. So that's going to be the heart of our argument. I mean, it's similar to how she defended or how she opposed this law in Louisiana a year and a half ago. The difference now is that the court's changed. Amy Coney Barrett's on the court now. It's a much less sympathetic set of justices to abortion rights, and so the challenge is greater than it's ever been.
So you laid that out really well, David, and I am kind of curious to like what we know going into this case about how the court feels, as you've established, about abortion and abortion rights, but also in terms of how they view the precedent in which she will probably argue the case.
Sure. So, I mean, we know that there are, 3 liberal justices on the court who are basically, a sure vote for upholding Roe v. Wade. Then you've got John Roberts, who we all understand, really kind of values the institutional legitimacy of the court, doesn't want to do anything to undermine that. He sided with Julie Rickleman in striking down the Louisiana law a year and a half ago, and so the hope is that he'll be on board too. So that's 4 of the 5 votes that you need, and then you've got the 5 most conservative justices on the court, and the question is there one of them that she can win over? And Amy Coney Barrett looks like a tough one to win. She's been written critically about abortion in her kind of career as a law professor before she became a justice. And so I think that the hope in the pro-choice community is that somebody like Brett Kavanaugh can be swung. Like, a lot less is known about where he stands on abortion. He hasn't written or talked about it that much, and so the hope is that he's persuadable. But I think everybody understands that it's a long shot.
And that's right. Like, kind of an amazing circumstance to find that Brett Kavanaugh, who had such a tumultuous hearing, would be the person who could be something of a swing vote here. So what do we know about the little that he's spoken about the issue? What do we know?
Well, one kind of quirk of history is that in the early 1990s, when the court reaffirmed Roe v. Wade in a case called Planned Parenthood v. Casey, basically kind of striking a compromise that kind of chipped away at Roe a little bit but kept its essential holding intact. At that time, Brett Kavanaugh was clerking for a lower court judge who kind of heard the case before it reached the Supreme Court. And, while he was clerking, that judge issued an opinion that basically laid out the compromise that the Supreme Court later adopted. So Kavanaugh was sort of tangentially involved in the kind of most comparable historical precedent for what's happening now, a case like really challenging the heart of Roe v. Wade. And he was clerking for a judge that basically, helped lay out the compromise that kept Roe intact. So, it's a quirk of history, and obviously a lot's happened in Brett Kavanaugh's career since then. He's become, more kind of closely wedded to the conservative legal movement. But the hope is that his role in that kind of historical event, maybe indicates that there's some flexibility.
I mean, ultimately, is this about a lawyer with a great argument before the Supreme Court justices, or is this just about the technicalities of law before those Supreme Court justices? What will it come down to ultimately?
Well, I don't think those things are fully extricable necessarily, but there's definitely a school of thought that there's really not a lot that Julie Rickleman can do herself, that, you've got 9 justices who've thought about this issue plenty, who've read the briefing, and have probably already made up their mind, and there's like a limit to what she can accomplish. And there's a defeatist version of that argument that you hear from some people in the pro-choice community, including the woman who argued that Planned Parenthood v. Casey case, which is that there's nothing that Rickleman can do, and that the numbers are the numbers, and you've got 6 conservative justices, and it's just too much to hope that 2 of them could be swayed.
David, just in the last 30 seconds that we have with you, what happens if Rickleman ends up losing?
Well, it sort of depends on how she loses. You know, there are different ways that Roe could be either overturned or significantly watered down. But the most immediate effect, there are a bunch of states that have what are called trigger laws that ban abortion the moment Roe v. Wade is overturned. And so those would go into effect, and you'd see women in large swaths of the country lose access to abortion.
Amazing. A great story, and as Joel said, telling it through an individual who's going to be smack in the middle of it all before those Supreme Court justices. David Yaffe-Bellany, thank you so much. Legal reporter at Bloomberg News on the phone from New Jersey. Joel Weber, editor of Bloomberg Business Week. He's in our interactive broker studio. Find this story in the current issue of Bloomberg Business Week magazine. All right, coming up, we're going to talk a little bit about China, U.S., Taiwan. Not pretty.
No, we're going to speak to Andy Brown, editorial director for Bloomberg New Economy.
It's complicated.
It's
so much is between the U.S. and China. All right, you are listening to Bloomberg Radio. This week, story in the current issue of Bloomberg Business Week magazine. All right, coming up, we're talking about China, U.S., Taiwan.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pellet. We move into the final hour of trading on this Monday, November 29th. As the trading month of November winds down, we have got the Dow, the S&P, NASDAQ all advancing, holding close to session highs. After Friday's 2.3% sell-off of the S&P 500 index in a holiday-shortened session, stocks higher across the board as investors calibrate risks from the new strain of the coronavirus. Lori Calvasina is head of U.S. equity strategy at RBC Capital Markets.
You know, what you can see very clearly if you look at the composition of the decline, Small caps sold off much more fiercely than large caps within the S&P 500. It was classic defensive sectors that ruled the day. I think that, we saw outright fear jump into markets, and to me that does seem a little bit exaggerated based on the information at hand. Now, I'm not saying this isn't a situation to take seriously, but I do think sort of a wait-and-see approach is probably a little bit more appropriate here.
Well, today we do have the Russell 2000 up by 0.3%. NASDAQ 100 index rebounding by 2.4%. NASDAQ Composite Index up 2% right now, higher by 315 points. S&P up 71, up 1.5%. And the Dow Jones Industrial Average now up 295 points, up 0.9%. 10-years down 15.30 seconds. 10-year yield 1.52%. Spot gold down 1.1%, 17.83 the ounce. West Texas Intermediate crude up now by 1.3%, 69.05 a barrel. Airline stocks moving lower as countries close borders and restrict flights. Among some of those names, we've got UAL actually higher right now by 0.4, but American down 0.5%, Delta down 0.6%, Southwest Airlines down by 1.6%, and JetBlue tumbling now by 1%. Recapping, S&P up 1.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you are listening to Bloomberg Business Week. Carol Masser along with Tim Stenovic in our Interactive Brokers studio. So too is Bloomberg New Economy editorial director Andy Brown here in studio with us. Andy, interesting story on the terminal that says China would face a colossal outbreak on a scale beyond anything any other country has yet seen if it were to reopen in a similar manner to the U.S. We're talking about COVID. We're talking about closing borders, not closing borders. How do you see this?
Yeah, so this really confirms the general view that China has no intention of backing away from its COVID-0 policies. And if anything, is going to double down with this new Omicron variant. So what happened was a bunch of statisticians at Peking University asked the question, what would happen if China opened up just like the United States? In other words, adopted a pretty laissez-faire attitude to COVID restrictions. And the answer is it would be an absolute catastrophe for China, that within 1 or 2 days, you'd get infections going from where they are now, which is about 100 a day, give or take, to 630,000, of which 20,000 would be serious cases, and it would completely swamp the Chinese healthcare system.
Is it just a numbers thing? I mean, here in the U.S., we have more than 100,000 cases a day, roughly.
It is partly a numbers thing. I mean, China's population is 1.4 billion. Right. But it also reflects the fact that China has a relatively low vaccination rate of about 55%. The vaccines they use are not the messenger RNA vaccines, Moderna, Pfizer. These are vaccines made in the traditional way, using inactive form of the virus or a attenuated, watered-down form of the virus. So the efficacy isn't quite as good. And the fact that because China has been in COVID-0, been pursuing COVID-0 for so long, there is almost no natural immunity in the entire population. So you let it in, and the numbers go through the. Now it's interesting because I was in Singapore at the New Economy Forum recently, and they have just started moving away from zero COVID towards COVID endemic. Basically, the understanding that you're not going to defeat COVID, and certainly not these more transmissible variants, including the Delta variant. So you just got to live with it. Their experience was you went from, I think it was about 20 a day to thousands a day. I mean, almost overnight. I mean, it went up to 5,000. And even in Singapore, of those 5,000, there were enough serious cases to make the government very worried that their ICU units could be overwhelmed. And don't forget, the Singapore healthcare system is about as good as any system in the world. And the Chinese system outside of the major cities, where it is world-class, medical system is world-class, in most of the country, in the countryside, medical is still pretty rudimentary.
This is so important. I think about when we talk about the markets and what's atop the list of things that we need to be worried about. If China, continues to be shut down or closed off from the rest of the world, what does that mean in terms of global economic growth or the global economic repercussions?
But you think what that means right now for their efforts to maintain COVID-0 in the face of Delta, right? So it means extensive lockdowns. I mean, they shut down the port of Ningbo, the port of Dalian. It's going to mean travel restrictions. It's going to mean that, you're going to get more snarls in your supply chains, factories closed down. I mean, look at the latest data. Factory output is slumping. Consumer demand in China is down because people are worried about going out and being exposed to COVID. So it's going to mean a good deal more economic disruption. And that's before Omicron, which is apparent by all accounts, a good deal more transmissible than Delta. So expect more of the same.
What is life like for people who are under lockdown in China?
So, I mean, it's all quite sudden and random, right? That, they'll lock down whole cities because they found 1 or 2 cases. I mean, literally, they have the confidence that they are able to track and trace and chase down every single case in a country of 1.4 billion people, which is about the same size as the United States.
So, Andy, why can't they forgive me? And I'm just kind of playing devil's advocate or something. So if they can track all of this down, will they ultimately track everyone down and just put a shot in everybody's arm and basically do it? Because is that their only savior in terms of kind of reopening?
Well, the exit for them is going to be is going to be a better vaccine, and they're working on mRNA vaccines. We don't know when they're going to deliver one, maybe next year, and therapies. That's really the only exit now that they can hope for.
Well, and it's interesting. You do wonder if the relationship, right, between China and maybe the U.S. or the rest of the world in terms of sharing vaccines, whether that could be a better situation.
Well, Moderna would like to manufacture and has a license to manufacture in China, but they haven't actually started manufacturing yet. I mean, partly this is a question of, we're not going to rely on foreign vaccines to save our population. They've got to be made in China. There's another question now: what happens to the Olympics? Now with the Omicron.
What does happen to the Olympics? How do they do that?
Well, the reaction so far to Omicron in China has been pretty much take it in stride. Okay, we've beaten Delta. This is another challenge, but we're going to rise to the occasion. Essentially, we're going to double down.
All right. Well, we will certainly see. But I do know that you talk to market watchers, and they're definitely keeping an eye on what's going on in terms of Chinese growth. Andy, thank you. Really appreciate it. Andy Brown, he's editorial director at Bloomberg New Economy here in our Interactive Brokers studio. And that's something we'll probably talk about with our market close a little bit later on. Among the things that are atop the list of market strategists, market watchers, right? It comes down to COVID, China being a huge economic engine for the global economy, and you do wonder if there's problems there, what happens?
We should know Biden meeting earlier in the day with CEOs of companies to talk supply chain, and you have to wonder what a continued shutdown in China means for those companies.
Yeah, exactly. I tried to order some things for Christmas, and
no luck?
Out of stock.
Happy Valentine's Day, everyone.
Out of stock, exactly. All right, you're listening to Bloomberg Radio. Let's get back to world and national news. Over to Nancy Lyons in D.C. Hey, Nance.
Thanks, Carol. President Biden says the best way to fight the new Omicron variant of the coronavirus is to become fully vaccinated. He says now is not the time to panic.
We'll fight this variant with scientific and knowledgeable actions and speed, not chaos and confusion.
Biden says he's already working with vaccine manufacturers to see what steps need to be taken. Pfizer CEO Albert Bourla tells Bloomberg they can have a modified vaccine ready very quickly.
We can right now have within 100 days, 95 to be accurate, our ability to submit a dossier and ask for approval from regulators. It's up to them how long it will take to give us an approval, but they have already indicated that they are expecting to have streamlined processes.
Bourla says he expects the existing formula of the Pfizer vaccine to retain some efficacy against the heavily mutated Omicron strain. Enforcement of one of the strictest COVID vaccine mandates in the nation begins in Los Angeles today. Customers and employees who are not fully vaccinated are unable to go inside restaurants, bars, gyms, entertainment and recreational facilities, personal care businesses, and some city buildings. The rule actually went into effect earlier this month, but there's been a 3-week grace period before enforcement began. There is a new pandemic record for the number of passengers going through security at the nation's airports. The TSA says more than 2.4 million people were screened yesterday. That is double the number that went through security on November 28th of last year. Global news 24 hours a day, on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. Carol Masser, along with Tim Stenovec, the team, the duo, back together again in our Interactive Broker studio.
Did you see any movies over the weekend?
I did not go out.
Did you go out at all?
Truth be
Did you
told,
leave your house?
Day after Thanksgiving, I think I stayed in my pajamas all day.
Hey, that's allowed.
Ate pecan pie.
That's allowed.
Watched some streaming.
You know, the weather here in the New York City area was not conducive for getting off the couch.
That's it. It was raining
It
or
was
something.
raining, it
or
was
cold.
snowing.
Something.
We tried to go outside at one point, and it was so cold, we just turned right around and went back inside.
Did you really?
Yeah, and it's not even cold. It's in the 30s. I'm like, it's going to be a long winter,
It
Carol.
does feel like it's going to be a long winter. Well, even a brand new Walt Disney animated film with a score by Lin-Manuel Miranda of Hamilton fame, of course, failing to light up the box office over the normally strong Thanksgiving weekend. A sign consumers are still cautious about going to cinemas. I think if you're going to go out, like, you make your choices. What am I going to do?
You know, there's also so much good stuff to watch on streaming. Speaking of Lin-Manuel Miranda, my wife watched In the Heights. I think it's on Netflix or Disney+.
Was it good?
Plus. She really liked it. Earlier in the vacation, we watched Tick, Tick, Boom, which is about...
I watched it!
It's so good, isn't it?
And, you know,
and that's
and-
Lin-Manuel Miranda, too.
And I thought it was interesting, ahead of Stephen Sondheim, unfortunately, passing, because he was very instrumental when it comes to the creator of Rent.
And the portrayal of him was spot on.
It really was,
Yeah.
wasn't it? It was pretty remarkable. I'm going to sneeze, so hold on a second.
Okay, I'm going to turn the microphone off. I'll keep talking. We're also watching
Okay, I
other
sneezed.
online retailers right now, especially because today is what's traditionally referred to as Cyber Monday. They're broadly lower today as early reads from data providers Adobe and Salesforce are indicating a slow start for online spending during the shopping period from Thanksgiving through Cyber Monday. That's according to BofA analysts.
In the meantime, U.S. retail foot traffic rose 30.8%, so almost 31% last week from a year earlier, according to Bloomberg's analysis of mobile phone location data collected by SafeGraph. So more foot traffic, but I haven't done a lot of shopping yet. Have you?
Bought a new phone.
For holidays? Oh,
Got a
you
new iPhone.
did?
Yeah.
Nice.
I know. It's a big upgrade from the iPhone 10.
But it kind of makes sense.
It makes sense.
Right? Because like
This
sometimes
thing's like strapped to us all day, right?
he can now go out and make motion pictures with his phone,
Exactly.
right? All right, anyway, we're going to talk a little bit more about the retail world in just a moment. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
World headquarters. I'm Charlie Pellet. Stocks higher across the board. Sharp contrast to last Friday. In fact, right now we are very close to session highs. Let's head right over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks are bouncing after Friday's sell-off. The Dow currently up 323 points. S&P's gained 75. NASDAQ rises by 334. The U.S. 10-year yield at 1.52%. Gold is down 20, and Bitcoin is trading higher by 2.9%. Among the main 11 SB sectors, all were in the green, led by gains in tech, real estate, and consumer discretionary. And leaders to the upside in the Dow, Salesforce, IBM, and UNH, while Merck fell 5% and led to the downside. In other news, Microsoft CEO Nadella sold half of his stake in the company. Jack Dorsey stepped down as Twitter CEO, but according to a spokesperson, is not leaving Square. And MicroStrategy bought an additional 7,000 Bitcoins. Wrapping things up, Biden says the U.S. will not need shutdowns or lockdowns this winter. Live from the First Word breaking news desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill, and to hear live breaking news over your Bloomberg, type squawk SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Charlie, were you out shopping?
A little bit online, but no, not really.
Can
not really.
You going to give anything away?
Well, I did. You know what? I gave away a lot of stuff. I walked in today with boxes of chocolates, gave them to everybody at the front desk.
Oh, that's nice. I didn't mean that. I meant, are you going to give away any gifts that you bought for people? But I'll take some chocolates.
Charlie does that. Charlie is our modern-day Robin Hood here at Bloomberg.
What can I tell you?
All right, Charlie Pellet, thank you so much. Well, Tim and I talked about some of the retail data points. Retail foot traffic up 31% last week from a year earlier. Shoppers driving U.S. retail sales during Thanksgiving weekend up about 14.1% year over year and up almost 6% compared to 2019. That's according to MasterCard's spending pulse. There's a lot going on in the retail sector.
Well, fortunately, we have joining us Greg Portell, partner and head of consumer industries and retail practice at Carney. He joins us on the phone from St. Louis. Greg, help us understand where we are sort of halfway through Cyber Monday, or at least in New York, wrapping up Cyber Monday. What are the metrics telling you about where we are compared to 2019? Because that is the benchmark that all of these companies are using.
Well, I think the overall message is that the consumer remains very strong. They've been the backbone as we've gone through this rocky period of time. They've been there throughout it, and they're there now. The challenge becomes how to interpret them, because the traditional retail observers are looking for, is it online or is it in store? And in reality, consumers shop all over the place. So it's a little bit misleading to evaluate them on one channel versus another, because we just don't live that way anymore.
No, but that's a good point. But we do try to figure it out, right? Especially as we
do try to figure it out, yes.
Well, so like, what are we doing? I don't know. Is it early in the season? Did the Omicron variant, did I say it right? Omicron. I knew I said it incorrectly. Omicron variant, did that freak people out at all? Like, what was going on this weekend?
It's a little too early to tell what the new variant will do to consumers, but if it's like any of the other variants, consumers will blow through the news fairly quickly.
Yeah.
One of the things
we already have, the market's bounced back pretty quickly.
Yeah, we're back because consumers love to shop at our outlets. Retailers were really smart this year, and they started to extend the holiday season. So it didn't really start on Black Friday. It started in the middle of October. And that allowed the consumer to really lengthen their demand cycles, which allowed the retailers to, in turn, handle the pressure of the supply chains a little bit better than they have.
Hey, what do we know right now about what consumers are finding out of stock versus what consumers are actually able to leave a store with? And look, I'll speak anecdotally here. I went and bought a new phone while I was away last week, a very exciting, staycation. And I went into one of the retail locations for the provider that we have, and they didn't actually have any of the phones in stock. But they said, we can FedEx one to you, and it'll be there in 2 or 3 days, which is fine, right? But when I did this 3 or 4 years ago for the iPhone 10, they had it in the store.
Yeah, it is. The prediction of demand and the flexibility of the consumer are really two components of that story. We did a survey of consumers and asked them, hey, how loyal are you to particular brands or particular items?
And shockingly, 45% said that they would go to a different store to find an item that they wanted. So it really isn't the out of stock that's going to trigger the problem. It's the how much disruption is there from going to one store to another. With the online options, it's pretty easy to shop and find the item that you want, even if it's not in stock at your first choice.
And I did pop into a Target over the weekend to pick up something, and it was a little bit of a madhouse.
Did you order it online, then go pick it up, or did
I did order something online. They said they had it, and then like en route, they're like, "Sorry, out of stock." And I walked into the store, found it on the shelf, like randomly. So I do think it was either misplaced, and they, it was low. So. But yeah, I did think about I'm going to do it online and just make sure I have it, and then ultimately I had to go to the store anyway and play around.
You point out a real problem for retailers. One, their IT backbones are not as robust as they need to be to track all of those moving parts. And consumers have really lost patience with the companies that can't figure it out. I mean, there was a certain amount of tolerance for that kind of inconvenience at the first part of the pandemic, but now consumers are expecting retailers to fulfill their consumer promise. And if you're people like you are going to the store expecting to be able to pick up the product and it's not there, that's going to have repercussions for the retailer down the road.
I was ticked off. I'm going to be quite honest with you, because I was like, you sent me a confirmation that I had it, and then I was kind of like, what? Because I might have raced to the store quicker, or I don't know what I would have done differently.
This happened to me.
We don't have patience for that anymore.
Yeah.
So what's the best practices for consumers right now if they're looking to get their holiday shopping done? How should they be thinking about the supply chain snarls and navigating this?
Well, if you're a shopper like me that depends on Christmas Eve to do your shopping, that's probably a bad idea this time of year. I mean, consumers should think about getting to the store early, having flexibility in what they want. I mean, the Tickle Me Elmo doll that you had your heart set on probably isn't going to be there this year.
Yeah.
So shop early, and as a retail observer, shop often.
Yeah. But it is interesting to see the equity trade today, because we see a lot of the online retailers put Amazon aside. You see a lot of them like Etsy and a few others that are struggling a little bit because of some of the early numbers.
Yeah, and I wonder how much of it is a reflection of what happened late last week. Was Etsy sort of seen as a stay-at-home boon? I don't know.
It's like complicated.
It is complicated.
Complicated. That's the word of the day.
Omnicron.
Omnicron?
No R.
Omnicron. All right, folks, we're coming up on the chart of the day. Dave Wilson, as always, he's going to save us right here on Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Are you ready?
I'm not ready.
I'm not ready.
Are you ready?
No, we're counting down.
I
Dave
know.
Wilson, just a couple more days here.
I don't know what we're going to do.
I don't know. I think I'm going to try and get his cell phone. Maybe it's on the terminal.
Oh, I'll find it. I'll find a way to get in
I'm
touch.
going to put it in my phone. Give him random calls.
And if he doesn't answer, we'll just show up at his house. Dave, you still have the at-home recording equipment, right? You can join us remotely? No, he said no, he doesn't. Okay.
All right, Dave Wilson's coming up with his chart of the day. Hey, Charlie Pellett, 29 minutes to go. Where are we?
Indeed, we are higher across the board right now with the Dow, the S&P, NASDAQ all advancing. Big turnaround from last Friday when you recall the S&P was down 2.3%. Right to the numbers. We'll give you the reason in a moment here. S&P up 69, gain right now of 1.5%. The Dow is up 285, close to session highs right now, up by 0.8%. NASDAQ is up 314, up by 2%. 10-year's down 13.30 seconds. 10-year yield 1.51%. Stocks higher, bonds falling as a relative sense of calm returns to global markets, with investors reassessing their worst-case scenarios for the Omicron coronavirus strain. Right now, we have got the S&P, as I mentioned, up 1.5%. Gold down 1%, 17.84 the ounce, and West Texas Intermediate crude up 2.1%. 69.60 for a barrel of WTI. Bitcoin up by 3%. New York City issuing a mask advisory today. Strongly recommend residents wear masks in all indoor locations, regardless of vaccination. Well, cases of this new variant have cropped up in locations from Australia to the UK and Canada, leading economists to reassess their outlooks for the global recovery. Dr. Joshua Sharfstein is Vice Dean at the Johns Hopkins Bloomberg School of Public Health.
It's going to be a little bit of a, buckle your seatbelts moment, because we're going to see all kinds of individual stories before the picture really emerges. Based on the studies that have been launched, I would expect 2 to 3 weeks for a much more clear picture, but I wouldn't panic over any one headline.
And Dr. Sharfstein with Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking some of those vaccine names, Pfizer down right now by 2.1%. Its German partner BioNTech up by 4.5%. Those are the ADRs. AstraZeneca's ADRs down 1.8%. Moderna out of Cambridge up 11.3%. And Johnson & Johnson up now by 0.5%. Briefly, a U.S. federal labor official has ordered a new election at an Amazon warehouse in Alabama. Amazon shares, they're up now by 2.1%, and the slump continues for Chipotle Mexican Grill, now lower for the 10th straight day, extending the longest losing streak since the company went public in 2006. I'm Charlie Pellett. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellett. This is Bloomberg. Okay, so the translation is return, 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 right?
Yeah.
Well done.
Thank you.
How many years of Spanish did you take?
We'll study abroad, action in college.
Nicely done.
Actually, yes. So, Volver, Volver, you've identified the title of the song. That's not bad.
So we're talking about returns for Latin American
Well,
stocks?
yeah, that's what we're talking about. That particular version of the song was done by Los Lobos. It actually came out on a single they released themselves before they got signed and, made a name for themselves as recording artists. And, that particular song is one of my wife's favorites. So, she learned it, from her father. He was a fan.
This goes out to Dave's wife.
There you go.
Sandy. Can I say that?
You can say it if you want. In any case.
Is she listening?
I don't know.
We'll find out.
Right.
We'll find out.
You'll find out tonight when you go home for dinner.
Yeah, absolutely.
Might be a little extra dessert for you.
Yeah, maybe.
Because you made her day.
Yeah, I try to do what I can,
All right.
especially, because I'm going to be spending more time with her very soon.
Exactly.
In any case, yeah, Latin America, that's what it's all about. I mean, this is something that Michael Hartnett over at Bank of America, who's their chief global equity strategist, highlighted in a report last week, a comparison between the MSCI Latin American Index, which we should point out is dollar denominated, that's sort of a key issue, and the S&P 500. And you look at where the ratio has been this month, it reached its lowest level since January 1988, which is particularly important because the index's base is the end of 1987. So in other words, you're practically back to its very beginning at this point. And the ratio has come down 89% from a record set back in October 2010. You look at what's going on with Latin markets this year. Mexico's up a bit. Thing is, though, when you figure in the dollar, those gains sort of erode. And then you look across South America, you see markets like Brazil down in part because of lower share prices, but again, weakness in the currency relative to the dollar. Similar story elsewhere, like Chile, for example. So it's really a continuation of something that's been going on for more than a decade. And it's not like Hartnett came out in his research and said, you know, you should do something about this. He was pointing it out just to show kind of a distortion, arguably, that's gone on in the market over time.
Well, and so there's a lot of markets, I feel like, throughout South America, Central America, they've been struggling, like generally speaking, but then you factor in, right, the stronger dollar, and it just is really rough.
Yeah, absolutely. I mean, and you think about Brazil and you know what they've been going through with their current president, Jair Bolsonaro, and the issues they've had with COVID and everything else. And you can sort of understand why Latin America more broadly is in the situation it's in. You know, in Brazil, you figure is the biggest country in the region. If they're having issues, you know, you're going to see weakness elsewhere.
Dave, do you have your charts picked out for the next 2 days?
Yes.
Okay.
There's more to come.
Okay.
I also have my stock of the day picked out for today.
Let's hear it.
That would be Berry Global. It's a maker of plastic packaging and other products. And they've got this activist investor, Ancora Group. They don't have the biggest stake, only about 1% by their calculations at least. They came out, though, sent a letter to the board, said you should take a look at your options, including either doing a buyout or selling yourself to somebody else. And whenever you see that sort of thing come up, you know, people pay attention. And Berry Global, the ticker is BERY. That's one R, even though the company name has two, as you'd expect. Well, the shares set a record today in response to this letter. And at the moment, they're up about 8%.
Yeah, and it's a stock that I'm just looking since about mid-October has been like bouncing off their lows and had quite a trajectory. But the market cap is something that you could see a lot of investors being interested in, maybe doing something, right?
Yeah, I mean,
falls into that kind of
just
sweet
below
spot.
$10 billion.
All right, Dave Wilson. Dave, don't go. Dave, don't go.
You can also check out Dave's stock
Sandy's
today
calling.
just
She
after
says you can stay for a
4:15
couple
p.m. Wall
weeks.
Street time. It's on Facebook, LinkedIn, and on Twitter at The One Dave. Let's get a check of the latest world and national news with Nancy Lyons.
Dan, President Biden says the new Omicron variant of the coronavirus is a cause for concern, but not panic. He says the best defense is to become fully vaccinated.
You have to get your vaccine. You have to get the shot. You have to get the booster. Sooner or later, we're going to see cases of this new variant here in the United States.
He says his team is working with vaccine manufacturers to see if some new options are needed. The trial of British socialite Ghislaine Maxwell is underway in New York City. She's accused of procuring underage girls for billionaire Jeffrey Epstein to sexually abuse. Maxwell has pleaded not guilty to all charges against her, but if convicted, could face 80 years in prison. Epstein committed suicide while behind bars before his sexual abuse case went to trial. The U.S. and Russia may be getting closer to their next round of high-level talks.
Kremlin spokesman Dmitry Peskov says Russia is making preparations for a call between Presidents Putin and Biden. It would be their first conversation since tensions erupted this month over a large Russian military buildup near Ukraine. Peskov says there's no agreement yet on timing, but the Kremlin hopes the call will happen before the end of the year. Russia's deputy foreign minister says Secretary of State Antony Blinken could meet with his Russian counterpart at the end of this week in Stockholm at a meeting of the Organization for Security and Cooperation in Europe. In Washington, I'm Nathan Hager, Bloomberg Radio.
Russia's Navy has successfully test-fired a prospective hypersonic missile. The Russian Defense Ministry says a frigate in the White Sea launched the Zircon cruise missile, which hit a target 215 nautical miles away. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Tim Stanovic. Hey, there's a story by our Kristen Flanagan on the Bloomberg, and it talks about Goldman saying COVID on trade caught hedge funds on the wrong foot.
Yeah, that's right. So a lopsided bearish stance on vaccine and testing stocks may have caught hedge funds out of position for the surge that was triggered on Friday by reports about the new COVID-19 Omicron variant. That's according to Goldman Sachs strategist Assad Haider.
Yeah, the rally for those stocks stretched into Monday's trading, with Moderna and Pfizer adding to their gains. The advance sparked by a macro shock from Omicron was textbook COVID on, Haider writing in a research note that he put out. Many hedge funds were caught off guard because they had bought reopening stocks and sold stay-at-home names in the past week. Mutual funds were also significantly underweight on vaccine names, and this was coupled with large short positions. Positioning is a big thing, right? If you do make
it's everything.
Right, exactly.
There's nothing else.
And I think I was surprised at home and like listening, and I'm like, oh my God, the market's selling off, and like what's going on?
You couldn't take a day away, could you? I was the same way.
It was just such
It
was such a difference in the tone from the days leading up to Thanksgiving that all of a sudden everybody was a little bit nervous about, okay, is it another wave? Is it another lockdown? What does this mean? Do we go back to the COVID trade? Right. What does it mean for Fed policy? What does it mean for next year? Like, what do I do?
Well, I think a lot of those questions are still being answered because the data continues to come in. If you weren't paying close attention on Friday, Moderna jumped 21%. It was up another 12% earlier in the day.
Again, as the best performing stock in the S&P 500,
wow.
It's top the
list. A real
list.
reversal because it was a major decliner over the last few weeks.
Right. We saw some pressure on next few months. And Friday was kind of a reminder that, yeah, you can be on the wrong side of that bet.
Yeah, and this Friday, we're going to get jobs data.
Yeah, so we'll see what that does in terms of tone and sentiment and positioning. You're listening to Bloomberg Business Week right here on Bloomberg Radio.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks are rallying as Wall Street's COVID fears ease. President Biden is cautioning against panic over the new coronavirus strain. Stocks higher across the board. S&P up 64 right now. 13 minutes to go ahead of the close. That represents a gain of 1.4%. Friday, you recall, the S&P 500 index was down 2.3%. The Dow higher by 256 points right now, up 0.7%. NASDAQ up 293, higher by 1.9%. 10 years down 12.30 seconds. 10-year yield right now 1.51%. Bitcoin rallying 3.3%, 58,171 on Bitcoin. Spot gold down 1%, 17.83 the ounce. Energy markets, West Texas Intermediate crude up 2%, 69.53 a barrel. Natural gas, however, plunging today, down 11.5%. Nat gas, $4.84 per million BTUs. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
A bigger mess has rarely been seen in Earth's orbit. Russia recently blasted a missile into one of its own moribund spy satellites, breaking it into thousands of pieces of space junk. The debris will endanger satellites and space missions for years to come. In fact, remnants from a similar strike by China in 2007 narrowly missed hitting the International Space Station just this month. It's clear that destructive anti-satellite missile tests must be reined in. Since 2005, 4 countries, including the U.S., have conducted such tests, creating massive amounts of orbital debris. With space junk multiplying dangerously and private sector satellites filling the skies, all 4 must recognize their mutual interest in stopping such tests. Never before has space been so crucial to global commerce and welfare. That's all the more reason to ensure sanity prevails. This editorial was written by the Bloomberg Opinion editorial board. I'm David Shipley. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPI and Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
TikTok, everyone. Just about 10 minutes left in today's trading session. Quite a reversal from what we saw on Friday. Remember, the Friday was a lighter trade in terms of market participants, but nonetheless, we are seeing a bounce back in today's trade. Not necessarily gaining back all the ground that we lost, certainly with those major market averages, but nonetheless, definitely seeing a pop. Let's get to it with our market guest.
Dave Donabedian is Chief Investment Officer at Cibc Private Wealth Management. He joins us on the phone from Baltimore. Dave, how are you?
Doing well. How are you?
Doing well, thanks. Help us make sense of what exactly is going on with the sell-off that we saw on Friday and what the market is telling us now about the way that it's feeling about Omicron.
Yeah, well, I think if before Friday, we had a market that was, either soaring or complacent about risk, depending on your point of view. And then, Friday on a holiday shortened trading session, a new issue was injected, Omicron, and complacency turned to fear. Although it was orderly, perhaps a little bit volatility on Friday, a little bit exacerbated by a lack of trading volume. But then I think what we have all learned in the last 20 months in a coronavirus environment is that investors are adaptable, economies are adaptable. And so I think with a little bit of time to think about it, investors today said, the Delta variant was a very important and significant health concern. It did slow the economy a little bit, but markets looked right through it. And, let's not jump to conclusions here. I think that's really important. We know very little about Omicron. In fact, the experts are sort of sending different messages. The WHO referred to the risk of Omicron as being very high, and hours later, the head of the South African Medical Association said that from what they could see, the patients with symptoms, those symptoms were extremely mild. So is the risk very high, or is this something with extremely mild symptoms? I think we're going to, go through another couple of weeks of fact-finding, but probably with market volatility associated with it until there's more clarity, particularly about whether the vaccines will be effective.
Dave, a wise person said to me just recently, we don't even know how to say this. We are still kind of early in the stages when it comes to that person's initials are TS.
Look.
Happens to be my co-host. But I mean, I'm not making light because people are getting sick still, and we know there's nothing funny about COVID and where we are and the impact it's had on society. But you make a good point, right? I mean, Tim, we're early on. We're still trying to figure this out, this variant.
And to some extent, Dave, it kind of felt like on Friday a repeat of what happened in March of 2020 when the world was quickly learning about something new that it hadn't experienced. And then, we speak earlier in the show with Dr. Rhonda Meadows from the Population Health Management at Providence in Washington State. And she says, what did she say, Carol? We've seen this play out before.
Exactly.
We've seen this movie before. Don't panic.
Exactly. And we have to take some time with it.
She said the market was right.
Yeah, exactly. And it is interesting, the resiliency, right? We see when investors are get some clarity and they bounce back. Having said that, we've talked about, and I think a lot of market watchers, certainly earlier this year, Dave, were talking about this being a much more volatile market. And we've seen the VIX swing around, certainly Friday, certainly again today. How do you anticipate market action, or what are you expecting in terms of market direction, maybe is a better question, as we turn into a new year? It's just around the corner.
Yeah, so we think that the market direction for equities is still higher, but our message is, sort of cautiously optimistic. Probably, if you take a 6 to 12 month time frame, it's probably more of a single-digit market return. And to your point, with higher levels of volatility, and that was our view even before this latest, piece of news on the coronavirus, because you have, valuations that are certainly full. We're at, past peak policy support, both monetary and fiscal policy, so not quite as much of a catalyst there. And a year in which, we expect earnings in 2020 to be positive, but of course not up nearly as much as 2021. So a more muted environment with higher volatility, which really, what I'm saying is a more historically normal environment compared to what we've seen in the last 3 years.
So we're also on the watch for a lot of economic data this week that we're set to get. Pending home sales for October this morning, hitting a new high for the year. We're expecting ISM manufacturing on Wednesday. And of course, that jobs report on Friday morning. We're, at least now, according to economists surveyed by Bloomberg, we're looking at just around 550,000 jobs added for the month of November. Apart from the jobs report, what's the most important piece of economic data for us to keep an eye on, Dave?
Yeah, I think the other thing I have my eye on is, any piece of inflation data. Obviously, we're very bullish on the economic outlook, the growth outlook, right through next year. And you mentioned a lot of the data. We think it's going to continue to get stronger, but we're also in the sort of higher for longer camp on inflation. I think that some of these supply chain shortages will ease over the next 6 to 12 months, but we're seeing stronger wage growth, and we think we've not even seen the peak of that yet. We have rising shelter costs, and just this incredible amount of liquidity sloshing around. And so the notion that you even see in the Fed's own forecast of inflation settling back down around 2% by the end of next year, we don't think that's going to happen. We think the new normal for inflation is going to be, is going to start with a 3 point something instead of 1 or 2%.
There's your new normal.
And, that's exactly, and that's not the end of the world for equities, but the transition related to that change in expectations is going to mean probably a more aggressive tightening path for the Fed over the next couple of years than investors currently anticipate.
But I do think about the spending power of individuals. We know consumers have been so crucial to this economic recovery, and then you do wonder if their purchasing power is reduced because of inflation, or we're seeing wages in some sectors, but not necessarily everywhere. And you do wonder, with the inability of wages to maybe keep up, whether or not that starts to dampen some of the earnings outlook going forward. Hey, Dave, we got to run. Thank you so much. Dave Donabedian, he's Chief Investment Officer over at Cibc Private Wealth Management, on the phone from Baltimore. What?
Wage growth, important number to keep an eye on Friday when we get those jobs numbers for the current month that we're in.
And how much is it spread out? We've seen certainly wages go up in some of the lower end or lower paying jobs, which is a good thing because they've lagged for so long.
Labor force participation as well.
Exactly. All right, folks, just got a few minutes left in today's trading session. Coming up next, we're going to be joined by our Bloomberg TV team for Beyond the Bell, our comprehensive market coverage. Live on Bloomberg Radio, Bloomberg TV, and YouTube. We're counting you down to the closing bell on this Monday, and this as those major equity averages are hovering near their best levels of the session.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Taylor Rich, Nolly Bass in for Caroline Hyde, counting you down to the closing bell. And here to help take us beyond the bell, it's our global simulcast, joined right now by Carol Masser and Tim Stenovic, bringing together our Bloomberg television, radio, and YouTube audiences worldwide. And missed a lot here on Friday last week, of course, the big sell-off, but you're seeing some of those losses being recouped right now, Carol.
Yeah, and I think it's a reminder, right, whether it's Jay Powell speaking from the Federal Reserve, whether it's CEOs that we speak to, that the big factor that we always have to think about, whatever we're discussing, whatever industry is, what's going on with COVID and how it can quickly bring down investor sentiment. And mind you, it was lower volume and lower participation on Friday, but we definitely saw, Tim, investors coming back in a big way today.
Yeah, and the investors coming back in a big way today on the S&P 500 and on the NASDAQ, bringing us into positive territory for the month to date. I know there is still one more trading day, but you're looking at the NASDAQ higher by, about 1.9% over the last month, and the S&P 500 by 1.1%.
And that really is good to bring in some of that longer-term perspective, Shanali. I think one thing that at least Gina Martin-Adams on Friday over at Bloomberg Intelligence was telling us that really resonated is maybe you had some of the liquidity issues and some of the short-term traders that come in, but the long-term investors then tend to come in on Monday with more rational heads. And you do wonder, every time we get these 2% drawbacks, you really see some buyers step back into the market.
Yeah, absolutely. It's the virus, but I want to be very clear here that there's so many catalysts still ahead. We have days of testimony coming up from Janet Yellen and Jerome Powell. We have that December 9th.
I'm sorry, I got to interrupt you, and I got to push back on Tim just a little bit, because, I mean, we are seeing the major indices, of course, still in the green here on a monthly basis. But you talk about the Dow being in the red on a monthly basis, the Russell 2000 being in the red on a monthly basis, and you start to wonder where that reflation trade is. Where is that cyclical trade that we spent so many months talking about? Did we overhype it?
Do you need yields to rise for that cyclical trade to happen? Could be the next question.
I thought you didn't care about the Dow, Romaine.
That's a good question. Well, you know what? I care about it when I care about it, Tim. And for you, I'm going to quote Dow points just for this day. 236 Dow points is what you're getting here on the day. If you prefer to hear that in percentages, that's up about 0.7%. Westinghouse, I believe, leading the charge there. The S&P 500 going to finish the day higher by about 1.3%, well off the highs of the day, but still up about 60 points at 46.55. The NASDAQ Composite, that's been your outperformer here on the day, up about 1.9% or 291 points. And we should point out the Russell 2000 is in the red here. It had spent a good portion of the day in the green, though it was relatively weak on the day, 2241 and change right now, down about 4 points, Carol.
I think we all need another piece of pie. I'm just going to put that out there.
How many pieces of pie have you had?
I've eaten almost a whole pecan pie.
A whole pecan pie.
No, seriously.
I can get away with that in the house.
Breakfast, dessert, it's really kind of scary.
For breakfast?
Yeah.
What's going on in the Masser household?
That's what you do after Thanksgiving.
Is it?
One of the things
I had eggs.
No, you have pecan pie, especially after Thanksgiving. One thing I've been watching, you guys, is the semiconductor sector. The SOX was up 4.1%, totally regrouped everything that it lost on Friday. The SOX is now up more than 13% for the month of November. You know, pick your name. Lam Research, Microchip, there's some of your top performers in the major indexes today. And also NVIDIA, a top performer this year, and those rallies continue, Taylor.
Shanali, you like pie, don't you?
I made 5 pies. Homemade.
How many have you eaten? That's the big question.
I've eaten 1 slice of
And they work for, don't they work
for
for breakfast, Shanali?
They do work for breakfast. They're better for breakfast.
Pizza?
I'm with you.
You know, the problem when we give Romaine a week off is he just really tries to get us off the rails. Let me try to Save us, Carol. I love that you brought in the stocks index because that's really where we're going to start here for our radio audiences. We do the sector winners, the sector losers, and it is green across the screen, all across the board. As Carol rightfully mentioned, the semiconductors index up about 4.2%. Autos, technology, software also in the green as well, up just more than 2%. I take you down, it's only one loser, 0.5% is telecom sector. But Carol, this really has been sort of that broad-based rally and really yields rising, though not regaining some of the big yield drop that we had on Friday as well.
Yeah, no pie for the telecom sector. Hey, the NASDAQ 100 gaining 2.3%, fully recovering Friday losses, and it can thank names like Moderna, which was topping the S&P 500 and NASDAQ. It was up almost 12% by the close today. The company coming out and saying that a new vaccine to fight the Omicron strain of the coronavirus could be ready by early 2022 if required. They actually had workers working on it over Thanksgiving, so a big bump up. That stock now up about 249% so far in 2021. Tesla, also a standout in the major equity averages. It was up another 5% in today's session, lost 3% on Friday, gained 5%, so came back in a big way on this Monday. Electric vehicle stocks overall outperforming the broader market after Chinese EV maker Li Auto, I hope I'm saying it correctly, forecast fourth quarter revenue. Yeah, well, we missed you, Romaine. Anyway, the company forecast fourth quarter revenue ahead of expectations. Tesla, by the way, reported to be launching its German production operations in December. That's a big deal. And Amazon, we had a lot of online retailers not doing well. Cyber Monday today, early indications was that it was a little light. Not so for Amazon, up today, despite some of the softness in other online retailers. Also, though, the FTC coming out, ordering Walmart, Amazon, and some others to provide detailed information for its inquiry into ongoing supply chain disruptions. But even so, Amazon finishing the day off its highs, but still up, Tim, 1.6%.
All right, well, speaking of disruptions, some disruptions happening on Twitter with a big executive shakeup there. That is my first decliner, finishing the day down more than 2.7%. It was interesting today when it came to Twitter's trade. When the news first emerged early this morning that Jack Dorsey was going to be stepping down as CEO, the stock shot higher. It was as high as 11% earlier in the day, but ultimately finished down more than 2.7%. Parag Agrawal, the CTO of Twitter, he's been there for over a decade. He's been CTO since 2017, is going to be taking the helm immediately. Unclear what exactly it means for Twitter moving forward. We did speak to Mandeep Singh earlier on Bloomberg Radio. He said more or less of a continued strategy. Investors are trying to make sense of what exactly it looks like under the new CEO. Merck finishing the day down by more than 5.3%. Shares wiping out their gains for the year, on track for their worst month in 12 years. The FDA meeting tomorrow to review the results and make recommendations for its oral antiviral treatment for COVID-19. Some disappointing data showing that the drug cut hospitalizations not as much as it did in an earlier trial. It was also downgraded to neutral from buy at Citi over a, quote, high probability that the drug maker will abandon development of its HIV treatment. We're also watching Peloton, finishing the day down by more than 4.3%, Taylor. It was higher on Friday.
Peloton after all the pie.
Maybe nobody was using it after Thanksgiving. It was up 5.7% on Friday, finishing the day, so giving back some of those gains. Peloton
Sort of
lower by 4.3.
A classic stay-at-home trade and then a reopening trade. When you see the ups and the downs of that, Tim, let's just talk about the ups and downs quickly, and then I know that we're going to get back to Twitter, which is one of the bigger corporate stories that we've been following. Take a look at the 10-year. You guys just remember on Friday, we'd fallen 16 basis points, so we're reflating our way back up 4 basis points on the day, but does not even begin to recover the bond price higher yield, lower action that we had on Friday. Same with the 30-year, Carol. We were down 14 basis points on Friday, sort of a lift back up today, but it has just been this range bound of a 150 on the 10-year that frankly we just cannot break out from. Speaking of breaking out, though, I think Twitter is where we go, Carol. I think it was so interesting that you're getting a chief technology officer as a head, and really brings up a lot of conversations about a founder stepping down and maybe a visionary stepping aside and a technology and someone really familiar with that platform taking over.
Yeah, talking with our Bloomberg intelligence analyst over on this about Twitter, that we saw that with Microsoft, right? They brought in really a technology product guy who has done wonders, as we know, as CEO at Microsoft specifically. Could this be the same thing for Twitter? I guess time will tell. But I have to say, guys, I feel like we are constantly talking about Twitter's problems enabling being able to monetize basically its platform like other social media companies. It's not a new argument, right?
Right, and in fairness, though, I mean, there were some very clear-cut decisions that Dorsey made, particularly to kind of avoid, I guess, some of the morass of some of those monetization techniques. And it'll be interesting to see if the new CEO wants to move it in a different direction. But there are a lot of issues here that really go beyond just Jack Dorsey. I mean, this is really about the structure of what Twitter is as a platform and whether it really can be monetized in a way that you can do, say, with a Facebook or with something, a platform that's a little bit more flexible.
That's exactly right. I mean, Twitter's product, it hasn't fundamentally changed since the product was launched. The only thing that we've been able to do differently on a fundamental level is the number of characters we can actually put in a tweet. Look at what Facebook has done with Instagram and Instagram stories and actually buying new companies, and the way that Instagram is really taking the lead when it comes to monetization for that platform. Look at TikTok. What you have with Twitter, 15 years ago is what you have with Twitter today. And I love it for
how big of a deal is the creator economy going to be? You have Twitter saying it's going to be using the Lightning Network to be facilitating payments on the platform, but how many creators will be using that to actually do that? We know that this chief technology officer turned CEO will focus on more developments around the blockchain. Bitcoin was up today, guys, and let's see how that actually starts to transform Twitter, where Jack Dorsey moves over to focus on his other financial
And I'm still a little skeptical of the new CEO, primarily because he's such an unknown quantity. I mean, obviously he's qualified enough that the board would put him in there. But there's a question here of why we didn't hear more about a broader search here for a replacement for Dorsey, why this was sort of an immediate sort of resignation, and then to put Agrawal in place. Maybe he's the guy who takes this company to that next level, as you alluded to, Carol, with Microsoft and some of these other companies that lost their founders and moved on to the next. But we'll see.
Or do you need an outside voice to bring in some new blood, new life, new thinking? And there's certainly, I mean, it's going to be a story we're going to follow. We'll see if the conversation changes, and certainly the investor thoughts on this company changes as well. All right, guys, that'll do it. Romaine, good to have you back.
Likewise.
All right, that's going to do it. Our market wrap on this Monday. Beyond the Bell, live on Bloomberg Radio, Bloomberg TV, and on YouTube. Join us again, same time, same place, tomorrow.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
What you got,
I'm still thinking about Twitter.
I know.
So here's one. So building on what Romaine said, here's one thing that's interesting. I went and looked at the new CEO's Twitter account.
Yeah.
He has barely ever tweeted.
Okay.
And he's only tweeted 5 times in the last few months.
Is that a bad thing?
Does he use the platform? Does he engage with the platform?
Well, that's a good point. Does he really understand it?
That's the question.
Do you have to use it to understand it?
I don't know. I think you should use the platform. I don't know.
I don't know.
Maybe he's a lurker.
We're thinking, everybody. It's not that we just forgot that we're on radio. All right, let's do World and National News.
Nancy Lyons is in D.C. Hey there, Nance.
Thanks, Tim. President Biden says the way to combat the new Omicron variant of the coronavirus is the same way we've been dealing with the original strain, by being fully vaccinated and masked. Bloomberg's Irv Chapman has more on the president's latest comments on the new variant.
The president spoke of his reasoning that led to a quick ban on travel from southern Africa.
It gives us time to take more actions, to make sure people understand you have to get your vaccine, get the booster. This variant is a cause for concern, not a cause for panic. Sooner or later, we're going to see cases of this new variant here in the United States.
The president said if a modified vaccine or booster turns out to be needed, development and deployment will be accelerated. In Washington, Irv Chapman, Bloomberg Radio.
President Biden also met today with CEOs to discuss holiday shopping. The president wants companies to tell his administration how the government can partner with large and small businesses to overcome the supply chain issues. World powers are working on a new round of talks with Iran in hopes of reviving the 2015 nuclear deal, or JCPOA. It imposed limits on Tehran's nuclear program in exchange for reduced sanctions. White House Press Secretary Jen Psaki says the U.S. is negotiating indirectly through allies.
Our objective has not changed. It remains a mutual return to full compliance with the JCPOA. This is the best available option to restrict Iran's nuclear program and provide a platform to address Iran's destabilizing conduct.
Again, that's Press Secretary Jen Psaki. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Finance, thank you so much. Carol Masser, along with Tim Stenovic in our Bloomberg Interactive Broker Studio. A couple stories we want to mention to you. One by, actually, they're both by Dow Jones, Wall Street Journal, and this is by Charlie Grant. Goldman Sachs introducing several new employee benefits, part of a bid to attract and keep employees in a pandemic that has made many people reevaluate their careers. This is a sign of our times.
This is a sign of our times, and it's a sign of what's happening at the biggest banks as they try to attract and retain talent. Let's go over some of these because they're putting some serious money behind attracting and retaining talent. So Goldman is doing a couple new things. What they're doing is they're offering paid leave for pregnancy loss and also expanding the amount of time that employees can take for bereavement leave. This is according to a memo sent to employees Monday and reviewed by the Wall Street Journal. Again, this according to Charlie Grant, writing for Dow Jones. Goldman also increasing its retirement fund matching, Carol, contributions for U.S. employees. They're going to do a 6% of total comp, or 8% for employees making $125,000 a year or less. They're also going to eliminate the one-year waiting period before matching employee contributions. So a lot of firms, when they do contributions for retirement, you can't be eligible for a match until a certain amount of period of time has passed. Goldman Sachs had that, and they're eliminating that.
No, really well said and laid out there. You know, large banks we know are competing for talent. It's a tight labor market. You know, you listen to us, you read the Bloomberg, you read Bloomberg.com. Lots of stories about people jumping from bank to bank, getting big salary bumps, getting bonuses. Banks don't want to lose people. It costs a lot of money in terms of training people, getting them up to speed, especially when you have client interactions, client relationships. You don't want to lose, especially people who are dealing in banking and other client forward-facing relationships.
Look, at the end of the day, is this going to be enough for people? You can give as much money as you can to people, but there will be people who will say, I don't want to come into work every day. I want to live somewhere else. I want to work remotely. And that's a decision that I've made in the last 2 years.
And they're going to make where they work a decision on that, especially in a tight labor force. The worker really has the ability to do it. Another story about workers quitting jobs in droves to become their own bosses. It's about entrepreneurship. We're seeing that at record levels. We saw that too coming out of the financial crisis. All right, we're going to talk more about all of this in just a moment.
analysis, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pelleton. Update on Wall Street and this Bloomberg Business Flash brought to you by Withum. More than CPAs, they are trusted advisors offering smart business solutions to help companies innovate, grow, and stay secure in today's complex world. Visit Withum.com for more. Developing story headline from the Bloomberg Professional Service. Right now, just getting word that Meta is postponing its ticker symbol change to the first quarter of 2022. Meta Platforms, Inc., company formerly known as Facebook. The Dow, the S&P, NASDAQ all rallying today. Friday, we had that 2.3% drop in the S&P 500 index. Today, the S&P advanced by 1.3%, higher by 60 points. The Dow up 236, up 0.7%, and NASDAQ up 291, up today by 1.9%. Stocks climb, bonds fell as a relative sense of calm returned to global markets as investors reassess their worst-case scenario for the Omicron coronavirus strain. Broad-based rally, S&P 500 index again up today by 1.3%. 10-year down 11.30 seconds, 10-year yield 1.51%, spot gold down 1.1%, 17.83 the ounce, and West Texas Intermediate crude up 2.3%, 69.70 for a barrel of WTI. But the major energy story today was the plunge in natural gas, dropping 11.2%, natural gas 486 per million BTUs. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So Ghislaine Maxwell's sex trafficking trial, it's kicking off and it is set to be one of the biggest of the #MeToo era. Jury selection today happened, and there were some interesting questions, too, about whether or not Maxwell herself is a victim as we look at this story unfold and what happens in the courtroom.
Yeah, we're covering the trial closely here at Bloomberg News. We have a live blog on it that you can access on the terminal and at Bloomberg.com. Joining us now is Anthony Lin, legal editor at Bloomberg News. He's with us in the Bloomberg Interactive Brokers studio in New York. Anthony, I just want to start with really high level here. What exactly is Maxwell being charged with in relation to what we know about Jeffrey Epstein?
Well, Maxwell's being charged with essentially grooming a lot of the underage girls who Epstein then abused, and participating in some cases, some of the abuse herself. Opening statements were actually followed closely after jury selection today, and the prosecution went into quite a bit of detail about how some of these women, 4 of whom were expected to testify against Maxwell, were lured into Epstein's orbit by Maxwell as sort of a shopping companion and someone who made them comfortable with giving him massages, which then led to sexual abuse.
How does it complicate things, Anthony, that she may have been a victim herself?
Well, I mean, the idea that she's a victim, I guess, is premised on the idea that she was someone under Epstein's influence, and then also that, you know, she doesn't have direct knowledge of what, and she's being blamed, she's being scapegoated essentially for crimes that Epstein can't be charged with now or can't be tried for because he killed himself in 2019. So I think the argument there is, you know, she's not directly responsible, but she's being held, you know, as her defense lawyers put it today, a convenient stand-in for Epstein who can't be tried.
Well, let's get more detail about what exactly the strategy for her defense is and how prosecutors are approaching it, at least as we know from opening statements.
From opening statements, I think they're leaning very heavily on this idea that Maxwell's being scapegoated for Epstein, and also attacking the credibility of the witnesses quite aggressively. I was surprised by, and suggesting that many of them are motivated by money. Many of them have sued the Epstein estate and have received compensation, in many cases millions of dollars from Epstein's estate. And the defense lawyer, Bobby Sternheim, said today that a lot of these claims, she characterized it as a big jackpot of money, were not adequately vetted. She suggested that the victims had tailored their stories to maximize their compensation, and suggested that, you know, Maxwell was therefore being falsely held responsible in a way that...
I feel like, Anthony, it's a tricky case, and it's going to be a case of she said, to some extent. But having said that, a lot of information has already come out about acquaintances of Jeffrey Epstein. And to me, and I think about our audience, and I think about what's going to trend high on the terminal, is any names that are part of our orbit in the business world, the finance world in particular, that Jeffrey Epstein played in. And I do wonder, is there the likelihood that more of this kind of information is going to come out?
I mean, it's not entirely clear whose name could be mentioned. The prosecution did say today that, I mean, one of the way these young girls were lured into Epstein's orbit was, his acquaintanceship with, many high-profile, high-level people. And we know some people who have, flown on Epstein's planes or been at his parties include, people like former President Bill Clinton and former President Donald Trump, and
we've reported on Leon Black
yes,
a lot,
and obviously Leon
Jess
Black,
Staley,
yes,
and individuals. And again, I'm not pointing fingers.
Right.
These are just, nothing's come out
yes.
that has shown that they have done anything.
Yes, none of those people are charged.
Right.
I mean, there is some possibility that, in establishing that they were lured into this world by its glamour and the power of influential people that played a part in bringing these people into Epstein's orbit.
What about when it comes to the makeup of the jury? I did find it interesting reading the live blog today that one potential juror who had a connection to private equity, worked at a private equity firm, juror number 87, was excused because this person was concerned that they wouldn't be impartial because of their connections to private equity.
Right. I mean, I think that in general, I was struck by the final composition of the jury and how, and just in terms of descriptions that you can glean from the questionnaires, how very different the jurors are from Maxwell's world and Epstein's world. You had 4 people that were sort of city or government workers. You had a home health aide, a number of people that that did not have college educations. It was, the defense had, I think even today, stressed to the jury that they're not to hold against Maxwell any biases that they may have, and they were screened for this, like against wealthy people, against people who are flying around in private jets and going to private islands.
Is this, just real quickly, just got 10 seconds, is this going to be a long trial?
Yes, it's relatively long. It's going to be about, 6 weeks. So it's expected to last until January. So a lot of interesting stuff will happen.
Well, we'll be following you and your team and all the coverage. Anthony Lynn, legal editor at Bloomberg News. Check out more on this story. Just head to Bloomberg.com. You're listening to Bloomberg Business Week. This is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Ready to talk little diamonds, little money?
I was going to ask you if you have any diamonds on your holiday list this year.
No, I don't.
No?
Actually. I am, forgive me, kind of tired of stuff.
Oh, wow.
I don't.
You're ready for the experience economy. I got to tell you, I don't want to say, I got my wife something really cool, an experience, but I can't say it because she might be listening.
Don't say it. All right, we're going to talk, though, with the head of corporate affairs and government relations at the De Beers Group of Companies. She's going to join us in just a moment.
In the meantime, a check of the latest when it comes to business news. Here's Charlie Bell.
Thank you very much. Do want to begin with a developing story. Headlines out of Washington. Fed Chair Jay Powell, in his first public remarks on the Omicron variant of the coronavirus, says it poses risks to both sides of the central bank's mandate to achieve stable prices and maximum employment. In prepared testimony released today, Powell said, quote, the recent rise in COVID-19 cases and the emergence of the Omicron variant pose downside risks to employment and economic activity and increased uncertainty for inflation. Also, Powell says there's still ground to cover to reach maximum employment. Again, those headlines crossing the Bloomberg Professional Service as we speak. Stocks today did advance, rebounding somewhat from Friday. The Dow, the S&P, NASDAQ all higher today. Bonds fell as a relative sense of calm returned to global markets, with investors reassessing their worst-case scenarios for the Omicron coronavirus strain. We talked about that today with Dave Donabedian, Chief Investment Officer at CIBC Private Wealth Management. He was our guest right here on Bloomberg Business Week.
We know very little about Omicron. In fact, the experts are sort of sending different messages. The WHO referred to the risk of Omicron as being very high, and hours later, the head of the South African Medical Association said that from what they could see, the patients with symptoms, those symptoms were extremely mild.
Dave Donabedian of CIBC Private Wealth Management. Here's where we finished. S&P up 60, a gain of 1.3%. The Dow up 236, up 0.7. NASDAQ up 291, up by 1.9%. 10-year yield 1.51%. Spot gold down 1%, 1784 the ounce. West Texas Intermediate crude up 2.5%. Bitcoin up by 3.4%. Cannot ignore energy today. We saw West Texas Intermediate crude up 2.5%, but natural gas plunged 10.9%. Briefly, Jack Dorsey, co-founder, and CEO of Twitter, is stepping down. Today we saw Twitter shares falling actually, Twitter down by 2.7%. And that's a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. Carol Massar, Tim Stanovic here in our Interactive Brokers studio. Hey, like most companies involved in the retail space, De Beers has had to pivot and adapt during the pandemic. And really, as consumer tastes and trends change, Tim, like we are seeing how people think about the things in their life. That has certainly changed. And you and I were just talking about experience versus things in terms of gift giving this holiday season.
And not just that, having to deal with a whole new generation of the way that people feel about jewelry. Well, Pat Dombey is Vice President of Corporate Affairs and Government Relations at De Beers. She joins us on the phone from South Africa. Pat, we have a bit of time with you, so I do want to start, of course, just by virtue of where you are, getting an update from you on how things are for you. Of course, South Africa being the epicenter of what we're seeing with the variant that's referred to as Omicron.
Yes, good evening. Good evening to both of you. I actually just came back home. I'm in transit in South Africa. Home is Botswana. And it was an interesting period trying to get out of the Western world home, which all of us were quite anxious to do. But I have to say that the environment here is very calm. We're putting up Christmas decorations and getting ready for Christmas. And this is true of Botswana as well. The president of South Africa spoke yesterday, and as of today, they've had 2,828 infections, And in Botswana, they've had 60 infections and no fatalities. So there's a whole focus, I think, result of both presidents urging vaccination and urging people on health protocols. So I think what we're seeing is, as President Biden said, that information is more important and we shouldn't panic. And I think that's coming across with everyone here with the presidency.
Yeah,
it's interesting. Definitely an interesting time.
Yeah, absolutely. And an earlier conversation that we had with a senior executive over at Providence Health System, which they saw the first COVID case here in the United States. We spoke with the president of Population Health at Providence, Dr. Rhonda Meadows. She said the same thing. You know, what we just don't know stuff, and we kind of got to relax a little bit and slow down and calm down until we know a little bit more information. Having said that, you did talk about it was difficult, though, to get home, and you're already seeing, you know, borders being closed up. I do wonder your thoughts on that, because there's certainly a big debate about whether closing borders is the right thing to do, or does it send a wrong message to a country like South Africa, who's being transparent about what's happening with some of these variants, but then potentially being penalized for doing so? Sure.
I think I can't speak as government, but I can only speak as a member of the private sector. That is one of the important aspects of the success of our partnership with the South African government and the Botswana government. It's interesting because they both reported at the same time. They have a very good working relationship, particularly when it comes to the border, because a lot of us come from both countries, like myself. Right. So the importance of adaptability, I think that the private sector with government are working together. And for us as a business, as you rightfully say, Carol, it's been having to really figure out how to be adaptable and how do we refine and be agile in this market. But I think we've done it. And I think that our whole focus is really focusing on our employees and, of course, the communities in which we operate are really critical. And that's also very important to our partnership with the government. Right. And then, of course, you know, demonstrating the importance of managing COVID with them. Right. Hey, hang on for a second, Pat. We have to do a little bit of news, but we'll come back and continue the conversation. We'll get a little bit more, too, about what you're seeing within your industry and the relationship with consumers and marketing and what you've had to do to adapt throughout the pandemic and coming out, fingers crossed, of the pandemic. We're going to come back to Pat Dombey over at De Beers. We'll get to her in just a moment.
In the meantime, to Nancy Lyons in Washington, D.C. for a check of the latest world and national news. Hey, Nance.
Hey, Tim. President Biden says the best way to fight the new Omicron variant of the coronavirus is to become fully vaccinated. He says now is not the time to panic.
We'll fight this variant with scientific and knowledgeable actions and speed, not chaos and confusion.
Biden says he's already working with vaccine manufacturers to see what steps might need to be taken. Pfizer CEO Albert Bourla tells Bloomberg they can have a modified vaccine ready pretty quickly.
We can right now have within 100 days, 95 to be accurate, our ability to submit a dossier and ask for approval from regulators. It's up to them how long it will take to give us an approval, but they have already indicated that they are expecting to have streamlined processes.
Bourla says he expects the existing formula, the Pfizer vaccine, to retain some efficacy against the heavily mutated Omicron strain. Congress is back in Washington and has a busy month ahead, according to Bloomberg Government's Emily Wilkins.
They've got that shutdown deadline on December 3rd, then moving a couple weeks to December 15th. They have the debt limit. That's going to need to be raised. We're still seeing a standoff between Republicans and Democrats over that. You also have that social welfare and tax plan known as the Build Back Better from President Biden.
Bloomberg Government's Emily Wilkins says the House has approved that proposal. Opening statements underway in the sex trafficking trial of Ghislaine Maxwell. Prosecutors say the 59-year-old was a predator who recruited and groomed underage girls for the late billionaire Jeffrey Epstein to sexually abuse. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much, Nancy. So we did have some headlines crossing the Bloomberg terminal just moments ago. This has to do with Federal Reserve Chair Jay Powell in his first public remarks on the Omicron variant of the coronavirus, saying it poses risks to both sides of the central bank's mandate to achieve stable prices and maximum employment. Keep in mind, this is a big week. We have some key data points, the jobs report on Friday, but we do also have Jay Powell, also Janet Yellen, U.S. Treasury Secretary, going up on Capitol Hill, answering questions, providing testimony on the U.S. economy right now and the financial picture, really, if you will, of the United States. They'll go before lawmakers.
Yeah, investors will be watching closely any clues as to the speed of tapering and even perhaps the idea of how to address inflation. I think there will be a lot of concerns and a lot of questions raised about that.
Well, and what's interesting is I think the development over this latest variant is a reminder. You and I keep talking about this, and I really do think if we have a market theme right now is, let's not forget, COVID, because it has the ability to quickly shut down our economy and take a market that, was easily, continuing to go higher, that all of a sudden takes it down in a day.
But every challenge that we're facing with the economy is directly tied to COVID. It is directly tied to us not being able to get stuff. That's a result of COVID.
Exactly.
Increased demand, decreased supply because of factory shutdowns when the world came to a screeching halt in March of 2020.
But it also could shut down travel once again, right?
Exactly.
Which is just, and the hospitality industry, which as we know, we've seen it in the U.S., the restaurant industry, which has definitely, come back. So it will be interesting to see how much of the questioning has to do with the variant or how much do they quickly, skew towards supply chains and inflation and what it means for policy.
Yeah, that's the question. From what it sounds like, though, it's not a departure from what Powell has talked about in recent months at all, right?
And if anything we know is, and you and I talk about this a lot on air, is that Jay Powell and the Fed, and Jay Powell in particular, has been very good about telegraphing what they are going to do. And so whether or not they're going to surprise the markets is probably highly unlikely. But we'll see what comes out in the testimony. All right, you're listening to Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet. Meta Platforms, Inc., that's the company previously known as Facebook, is postponing its ticker symbol change until the first quarter of next year. The company had announced plans to change its ticker symbol effective Wednesday. Today, Meta shares up by 1.5%. Fed Chair Jay Powell, in his first public remarks on the Omicron variant of the coronavirus, says it poses risks to both sides of the central bank's mandate to achieve stable prices and maximum employment. The Dow, the S&P, and NASDAQ all higher today. Friday, the S&P was down 2.3%. Today, the S&P gained 1.3%, higher by 60 points. The Dow up 236 points, up 0.7%. NASDAQ up 291, up by 1.9%. Tenured on 6/30 seconds, 10-year yield 1.49%. Spot gold down 0.9%, 17.85 the ounce. And West Texas Intermediate crude up 2.6%, 69.92 a barrel. Natural gas today plunged 10.8% to 488 per million BTUs. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. I want to bring back our guest. Still with us is Pat Dombey. She is VP and Head of Corporate Affairs and Government Relations at the De Beers Group of Companies. She's still with us on the phone from South Africa, and we know it's evening, so we really appreciate you really sticking around for us. Pat, so tell us about the business right now. Do you guys have all the workers that you need to do what you need to do? How has the relationship with consumers changed as a result of the pandemic?
Sure, Carol. Well, it's interesting because we're actually pretty excited. We had, the beginning was a little bit tough for everyone in 2020, but based on our adaptability and being able to refine and look at what it meant to continue our business, we ended with a pretty good year in 2020. And now, going into the holiday season, we're looking at some of the data that's been coming out, like sources, Edan Golan, Diamond Research and Data, that are reporting that U.S. jewelry sales advanced to a stunning 41% from January through May, totaling about $32 billion. So that's up by about $23 billion in the same period pre the pandemic. So that tells us a few things. It tells us that American consumers want to celebrate life and each other a little differently. I think you said that a little bit earlier in the program. And they have a real strong love, more importantly, for diamonds, especially at this time of the year. And, this is also coming out from the Natural Diamond Council from some of the research that they've done in March through May, showing a 30% increase in diamond jewelry sales. So we're really seeing a period during the holiday season as excitement and hoping for strong gains and profitability. And if you layer that with some of the research that we're doing ourselves, 88% of the consumers that in our market research believe that it's probably better during this time to invest in fewer and better things. And we believe that diamonds, I speak as somebody who comes from natural diamond country, are extremely well positioned for that. So as the holiday season commences, we're really excited as we see that people really want to share something special with their loved ones.
Right.
And what could be more authentic and real.
Hey, Pat, help me understand and help our audience understand where your job comes in when it comes to transparency and sustainability and helping consumers understand that the diamond that they are buying is one that they can feel good about. It's one that was mined sustainably, it was mined in a conflict-free way, and it wasn't mined using labor practices that, for lack of a better term, aren't appropriate.
Well, thank you for that question, because it really is paramount to everything we do. And it's something that, as a person from Botswana, that I'm really proud of our company. We definitely believe in sustainability, and we've invested heavily in innovation and technology as a link to that. We've created a sustainable framework, which we call Building Forever, and it says exactly what it means. It's at the heart of what we do, and there are really 4 pillars to that. The first, and probably most important right now with COP just recently completing, is protecting the natural world, which is really focused on the environment. And we just recently did a partnership with National Geographic, which is a 5-year partnership that will allow us to help protect endangered species in my country, in Namibia, and in Angola, in an area called the Okavango Delta, and ensure that water and food security for more than 1 million people in the Okavango Delta is protected. And this is in the partnership with National Geographic. And then secondly, where I think I'm a product of this, is partnering with our communities and enabling them to grow. And this is where we really see Building Forever from a human factor. I was lucky to receive a scholarship. There are thousands of us who received the scholarship to study in medicine, engineering, the whole medical area, science areas. And maybe that's one of the reasons why we were quite high up in terms of our reporting on COVID in our countries.
Right.
And then, of course,
Pat,
other.
Go ahead. We've only got a couple minutes left here, and I'm just wondering, you obviously are really key in terms of the messaging, and it sounds like you are listening to what is certainly on the minds of the public and ultimately your consumers. Is it translating into tapping into the ability to gain a younger audience? Tim and I talk about this a lot, whether it's wife or friends that he knows that aren't necessarily into diamonds. It's just different. I look at my daughter, I look at, different individuals that maybe aren't into jewelry that like my mom was, or even myself. And I just wonder, is it translating the messaging in terms of what you guys are doing as a brand, the impact on the environment? Is it translating and reaching the newer, younger consumer?
That's a very good question. Well, what we're seeing is that through our insights research, we're seeing a generational shift, as you rightfully point out, with consumers, particularly young consumers. You're right. What's really important for them is provenance, which is constantly evolving. And they really want to know the ethics and sustainability, but they also want to know the positive impact that the products have. So it's not just about the ethics, but also knowing where it came from, and it's all about the who, what, and where, as it were.
Forgive us, we've run out of time, and I really am glad we got some time with you. Do stay safe, and hopefully we can continue this conversation at another date. Pat Dombey, VP of Corporate Affairs and Government Relations, at De Beers.
Well, coming up in just a few minutes is Sound On with Joe Matthew. Joe joins us now for a preview. Joe, what's planned?
Well, we'll start at the White House, what the president had to say about the new strain, the new variant. We're going to talk supply chains with a retail analyst from Morning Consult. People blame only one party more than President Biden for this. We'll tell you who it is.
Oh, we have to listen.
Okay.
Kind of have to listen. Okay.
Well done. Nice tease.
How about
Sound On with Joe Matthew coming up. For Tim Stanovic, I'm Carol Massar. Have a good evening.